people that's taken upon themselves to like to volunteer to do stuff like this. Okay, I'm gonna get started on the stream. Hold on. What's up, everybody? Good morning. What's up, you guys? What's up, guys? Good morning. Where's everybody? Did I not post the Zoom call? Oh. That's why. I didn't post a link. They didn't tell me that. I haven't put the link in the Discord. I was like, where is everybody today? And then put the link in the Discord. What's up? Zoom calls are live. YouTube is live. What's up, guys? Giveaway today. 2 lifetime memberships. So we'll do that towards the middle-ish tail end of the morning stream here on YouTube. What's up? Everybody in Zoom, feel free to head over to YouTube real quick. Smack that like button around. Oh, hello. Hello, Yellow Line, monthly hedge pressure, pre-market. Oh, man, I hate when we get most of the trade already taken care of today. Reviewing monthly maps from yesterday, just a little pre-market. Little pre-market funsies. Leading into the new trading month, right? The S&P has wiggled its way back into bull territory. There's a slight bit of bearishness here still. Bear resistance still. This is hint of a topping pattern to see bear resistances showing up at the high of the price in the future. Okay. So when you see this pattern, it means it's a topping pattern. So, but the thing is that now in the last 2 or 3 days, the bulls have kind of stepped back into play. The bears are kind of weak again. So we're now getting some bullish run against this kind of bearish end of the year. Again, I'm not bearish the market. Let me start over. Not bearish. Do not quote me for saying that. Stall in the bull market's the best way to say. It is showing resistance, meaning that I'm expecting it to stay there. No selling off, no shorting. Everything here is hyper bullish. Hyper bullish in general. Yeah. What's up, friends? So the dog. Yeah, dog reveal. Dog reveal. Hold on. Hyper reveal. He's already upstairs whining. I got some good stories about the pup already. Oh, wait, hold on. Let's get QQQ. Sorry. Don't do that. Oh. Ooh. We're already starting to pack up for the move to the house. You guys might notice the desk that used to be here is now gone. Also, the dimmer thing went out on the sign. It's kind of sad. It's very anticlimactic to see that sign like. Oh, we should do a puppy cam. That'd be kind of cool. Okay, all right. Come on, QQQ. The maps. Market monthly maps analysis on Q. Similar boat showing a topping pattern when you have bear zone above bull zone, just like that. I'm sorry, you have an illiquidity pocket, and right at the top, it's showing resistance here. It's like that's typically what I usually call like, okay, this is likely a top in the market till the end of the year. I made a tweet about that. That's likely the case. If these things go away, I'm going to undo my stance. The S&P itself, or QQQ itself, has bullish liquidation, and waves. Still bullish. So bulls selling, bulls buying, bulls selling, bulls buying. So with the resistance on top of that, and what we call illiquidity pockets, which is the space with bull and bear zone, like so. Bull zone bottom, bear zone top. These are called illiquidity pockets. Illiquidity comes with volatility. So this is a classic megaphone pattern. See how it gets wider? The market, it's not going to trade like that, but the market has lows to here and like highs to there is how it's structured now. Now, again, anything can happen. Push the market out. It doesn't mean I'm shorting the market whatsoever. Right? Our indicators aren't showing any kind of selling pressure. But it is showing that I'm going to be very cautious betting on continual rallies here. And this lasts all the way through the end of December. So this is actually forecasting the future. So good morning. You're like number 26 on YouTube. Let's go. All right, everybody on Zoom, head over to YouTube. She smacked the like button around. You're going to say the number of people in our Zoom call, well, it should be the number of likes on the stream. If you can, leave it open and watch. It'd be kind of nice. YouTube's getting very confused because some of our streams have 300 people. Some of them have 100 at the start of the day. Because the giveaways get like really big and then everybody piles in after the Zoom call's over. So, Zoom call program is cool, but should head over down to the help the algo out. All right, pre-markets ready to go. Tapping yellow line, MHP support. All right, this is all bullish setup for the intraday. Holding MHP is one of our greater market signs. There's 3 of them. DD band's the 3rd. Monthly map is the 3rd. Sorry, 2nd and 3rd. So monthly map is showing bullishness with bear resistance, which means megaphone pattern at the top. DD ratio was bullish yesterday. Above MHP is bullish. So far, 2 of the 3 signs are still bullish. I ain't showing this market, baby. Ooh. Welcome to the best trading stream on the planet. Giving away 2 lifetime memberships today. You guys are here to watch the champ train you on how to throw punches. Not like Mike Tyson, where he withheld his punches. Did y'all watch the fight? Speaking of that, well, that's old news at this point, but now all the videos are coming out showing how Tyson held back all the opportunities he could have taken, where he goes like this and then he like doesn't hit. And the one where, you know, Jake Paul obviously like taps him and like hugging it and taps him, like whispers something in his shoulder, whispers something into his ear. Basically, it's dangerous to get that close to Mike Tyson's mouth, but whenever you're there, he's basically like, bro, come on, you want to get paid? And then Mike like tapped him on the back, like, okay, I get you. It was so obvious through the match. Hey, whatever, he needs money, dude. I'm saying, I thought it was gonna be a bloodbath. So many opportunities where it just basically showed how weak Jake Paul's fighter compared to Tyson was. He left himself open, very much so, without guarding himself as good as he should have been. Morning, what's up? I'll open both around. Yeah, love you guys. Love you guys. Thank you. Yeah, he was there for just a payout. But man, oh man, like the videos feel like slow motion. Say, look at this. Mike had like this perfect shot. He would have floored Jake Paul. But yeah, anyways, everybody knows it was a hoax, but that's cool. Now he's challenging like other streamers too. I would have been in the hospital. Dude, I'm serious. If they're watching Tyson train, I wouldn't go anywhere near him in a boxing match. The guy's still one of the most powerful punches on the planet, even at his age. Scary. Reminds me of the video game where it was one tap, you're on the floor, you know? Like, video game is crazy. All right, welcome to the stream, guys. Welcome. Our giveaway today, don't forget, a couple giveaways going on from Black Friday. If you spend $250 with Elite Trader funding, you enter to a drawing forever where we're going to be pulling out names like once every month or so to have a big drawing for those of you that are big spenders there. Then we'll send thousands of dollars there. So every $250, your name goes in a hat. We're giving away everything from monitors, computers, lifetime memberships, merchandise. Hell, we might even put in a trip in there. Who knows? Something fun. Like every year we may do something. I always thought about like maybe like a vacation or something. Something like really cool. Because a lot of you guys are doing trader funding programs. Buy all of your stuff using our link. It's in the description or it's in the bot is posting it. Every $250 you spend with them. It doesn't take much to do it. Some people spend $3,000 or $4,000 a month. That enter you 8 times in the drawing. Today we're giving away 2 lifetime memberships to those of you that bought the monthly membership at Rocket Scooter. $99 for the first month. The platform, the training, everything. Learn how to be a master at reading our stuff. There's a link there. Black Friday half price for the first month. Check it out. All right, market's getting ready to get open. I hate when we get close to the DD band right out the door. Not my favorite. You guys know the rules. One trade, everyone knows the rules. Let me steal that from Portney. But anyways, here you have outside the band. You guys know me classically. No trade. No trade. And I hate the market does this overnight. No trade above the band. That's the rule. Rule of thumb here, okay? 88% of days will close inside of the band and 4% will close above. 8%, these are real stats in the back test. Take our classes, we show you the stats on the screen. You got to count them. Yeah, make sure you guys use our link for us to get the credit. So just FYI, let me give you the link. You have to use our link. Have to use our link. Let me give it to you real quick. And if you guys trade other trader funding programs, I know a lot of you guys are just loyal to what it is you're loyal to. You know, we'd like for you to check out ETF, but if you don't, I'm going to go out there and get a link for everything else. I'm going to try to get you guys a discount for everybody. Puppy reveal. Oh, I got a shameless plug for the views. Yeah, the puppy reveal. That's the way to go. All right. Upper DD band. I don't really trade outside of the trade. I only trade inside of here. I only short when DD ratio is less than half. You guys know the rule. And today we're going to get that number in a couple of minutes. I usually don't short up the upper DD band, but I don't trade outside above this top. Now, since we know where the levels are, I'm going to go ahead and translate that right over to SPY. We're going to NQ. We're going to today. In Q, I'm going to just draw that green line. All right, where you at? So QQ's here. Bulls on bottom I always take, which is a really good setup. So bulls on bottom back to green is the setup today on QQQ. Oh, and we got bear zone, bull zone sandwich, which is great. All right. So I'm going to long here. I'm going to long again there. Trade right back to there. And if this trade takes off right back to there, you guys know the drill. 1A, 1B. If we lose this, there's a 1C and a 1D. That's the bad part about this setup. That there's a whole bunch of entry points really close to each other. A lot of them. 1, 2, 3, 4. So I'm going to take my overall trade and chop it to a bunch of pieces. Like I said, I do no trades up here. Nothing. So it might be a sit out day, which is cool because we can play at the puppy. What's up? What's up? What's up, everybody? Good morning, YouTube. Don't forget to smash the like button. Everybody in Zoom, go to YouTube. Leave it open. Leave it on mute. Click the like button. We want to make sure we do that. So we'll keep the Zoom program going. Good morning from London. What's up, Danny Reynolds? What's up, Diddy? What's up, Beavis? What's up, Jen? Jason, Robert, Chris, Edward, Connor, Beavis, Master Rich, Suk, We, JFK Icewell, and Trainix, Ransom Baggins, Andy, Tran. Andy, you got your account set up, right? I sent you an email. Ebcat, Jessica, Robert, Pop Off, Simon Dean, Ian. Welcome. Welcome. What's up? We're always like looking out for everybody. So like sometimes I'll send you an email. Now remember, there's a lot of scammers out there posing as the accounts for like influencers and famous traders and stuff that'll message you in Discord. One thing we'll never do is message you in Discord for anything official. Some of you might get a friend request from a fake Matt every other day. Trust me, I even get fake requests from the fake Matt. They got no shame. They even message me asking me to join their crypto trade rooms. My face and my picture in their DM. So we will never DM you, by the way, just as a rule of thumb. We will always send you an email from matt@rocketscooter.com. So if you get that email, it's legit. It's funny because everybody's like, wait, you're canceling our memberships at the legacy site? You want me to sign up at this new site called Rocketplace? Is this really Matt? And I'm like, okay, yeah. I can understand. I've trained you guys not to listen to random emails and DMs. But yes, this is actually true. We're moving everybody from rocketscooter.com to rocket.place, our new website in the marketplace. So all the old legacy members by the end of this month will be canceled. If you need to move your membership over, we'll give you the discount code to lock in your new rate. There. Lifetime membership. We'll do lifetime giveaway in just a little bit today. So ES, 10 points off the high. There's your DDB on ES. Here. Yes, even better. Okay. You guys ready for some magic? 45, 590. 794, 77. All right, right about here. All right. You can use a little crazier than the S&P today. Your resiliences are negative. We know how that works. Resilience can forecast hedge pressure breakdown to the downside. That's likely the case. So I still don't short markets in this case. I usually just sit out and let them fall. You guys know me. I'm always waiting for bull setups, even when there's bear presence. Okay, does everybody know the rule? Res less than 0 can forecast a hedge pressure break. We know how that works. So that's likely coming down. And downside of here, there really is no support until bull zone to here. We call this Matt's favorite trade. This is the highest probability setups we have. And even though I know it's likely going to sell, I don't short it to here. I stay on the sideline and I wait either for conditions to improve or I wait for my long entry to go to here. This is like a 90% probability trade. I'm going to hit it really fucking hard when we get there. And until then, maybe I'll go get the puppy. See, when you trade at a master's level, you can draw on the chart what's going to happen and make 5 decisions in a row. It's probably coming down. It's too close to the top. I'm not long from here. I'm going to let it trade down. We're going to fill the gap. So by the way, be gapped up. We will fill the gap. Market's strong enough and bullish that we're likely to support there. Today's trading day. Watch. I will leave this on the screen. And if I'm right, you better buy a membership because I teach you how to do this. So now I'm like, oh, I got probably like 30 minutes, an hour. Get the puppy. You guys want me to get the puppy? That bull zone bottom is below DD. Ah, it's below DD. So maybe not. So there is no actionability off of here as of this point. Let's review. Hold on. We got a new triple B, right? I've been doing all this traveling and stuff. I haven't even done it. Let's make sure we get that done. Let me post that in channel. Don't hate me because I've been lazy. Well, lazy, but traveling. Okay. What did we roll? We're above, guys are above triple B as well. We rolled in the backwardation, now we're above. Yikes. Zoom, tell me, is that the right number? 1653? Is that it, Ben? Got you, Andy. Okay, good. Awesome, bud. We're always looking out for you guys. So, you know, I'm always making sure everybody's where they need to be, access they need to be. There's 6,000 people. It's tough to manage, but we do it. All right, as soon as the Thinkorswim dance stopped working, let's go ahead and mark this. Top. I'm here, 1653. All right. Just clean out some of these old ones. Overshooting pivots is likely. Yeah, so the other bulls on bottoms way outside of DD band, right? So it's great because I will long from there even more so. I always long on really strong pivots. All right, 1653. So we're above triple B on VIX. Just letting everybody know. I'm gonna post that up too in the channel. Hold on, let me just delete this for now. Let's get the picture. Okay, we're gonna wait for that pullback. Make sure we post that inside of our Discord. What's up, guys? Welcome. We're gonna do a giveaway in a little bit. Hang tight. Post that in the... Is it 1653? I mean, listen, guys, listen. How fucking good am I at this? Crazy. Oh, predictable open. Predictable. So predictable. So predictable. So easy. This was so... All you guys did this too, right? Super easy. What did I tell you guys pre-market? We teach you how to do this in monthly maps. The first thing I said, we have a topping pattern The market. That's the first thing I said. We didn't even get a bounce at the gap fill. Is this considered an event? Absolutely considered an event. Wow, you guys are so good. All right. Look. Self-catalyzing event. You ready? I love when we teach the class and it happens the next day. The universe has been pretty fortunate to us in this particular setup. We've been having like, remember we had the Bear Zone Big Mac, as everybody called it, right? And then the very next day it happened. Actually, like 2 days in a row it happened. And now we're like, did the Catalyst class yesterday. So you can clearly see an impact line, right? Everyone sees it. Super simple. This one's very easy to find. Right there. Volatility expands, contracts right there. Expand. Expand, contract. That's it. So there's your anchor point at the top. Just like that. Let it keep falling, baby. All right, question. Anyone YouTube, did anybody buy the dip or buy any of this? Are you guys learning? Are you guys learning? 8 on that short. Anybody here long and bag hold out the door? Are you guys learning? Y'all learning that we're you guys are learning the ropes here, right? Telling you, there's a reason we're getting bigger and bigger and bigger and bigger. What we have is one of the first special things that Wall Street's seen in a long time. You ready? It's a whole new thing. All right. Thank you. Thank your swim for triggering my epilepsy. Let's go. Stop dancing around. Oops. All right. What's the risk interval, you guys? 40 points. S&P. Now I'm just waiting for my targets, right? Yeah, this is a trick. Ready? With the catalyst is active right now. What do I do when catalyst is active, you guys? What do I do when catalyst is active? What do I know? What do I do when catalyst is active? If my screaming at you for 2 hours yesterday didn't trigger something from your childhood traumas, and I'm not doing my job. Hmm? Let me make it very clear. For those of you that are blind. Let me be very good. Fold towels, watch porn, go put your daughter to bed, click the X, no trade, don't even touch. Yeah, no, seriously. So does Matt's favorite trade, is that even gonna be touched that today? Debatable, but no, I usually don't when cat is active. Now remember, above the cat line, which is here, there's no actionable long pivot. There's no actionable short pivot either. Down here, the only actionable pivots exist outside of the zone. So guess what? By default, I've now chosen to sit out for the entire day. We all understand? This is how I do it. There's no entry. My hand is tied. We already know the market's likely falling to here and maybe even falling further. That's the problem. So let me translate the cat active line here to SPY. So we know that is pretty much right here. The cat is active. Put a little text blurb down here in case you guys don't know. Sit out below green. Cat active. This is not instructions for you. Matt will. Sit the fuck out below green. All right, so you guys know this instruction for me. I will. Volatility is too much. Okay. Wait, how do I delete the word? Is that like permanently on my screen? That's funny. Okay, so I can't. Oh, that text was from here. That text wasn't on TradingView. Let me do this. Matt, no trading. That's unfortunate for today. Now, again, if we trade back up to here and then start selling, this no longer a catalyst, right? So we touch the anchor point there. That's the problem. Here's the pieces of this. Okay, ready? Let me show you how I made this guess. The market's still likely going to fall. Number one, I'm just going to draw it on my screen here. Number one, out the door, resilience. Less than 0. Our cheat sheets. Let me show you guys. If you've never seen our stuff, by the way, everything's done in little flashcards. You want to learn this? We literally give you little cartoony flashcards to make it super easy. In our Discord, they are all right here. We have 3 major techniques that we use for entries. This is one of them. Okay. This little white box, if that resilience number is less than 0, we push to the bottom of the box or off the bottom of the box. It doesn't float above it. So, trading above it, resilience less than 0, number 1, we go to the bottom of the box. That was easy to see right out the door. Number 2, because hedge pressure's in the way, it's a hedge pressure break on top of that, which causes irrationality in the beginning. Along the way. Resilience ranks higher than hedge pressure. Hedge pressure break causes additional chaotic volatility with additional high volume. You see that? Again, let me make this bigger. Let me redraw this. Then I can make this bigger so I can see it. So I'm going to piece together all the parts. This goes all the way to here. Breaking this along the way makes it even more violent. You guys see there's that extra violent move there? That's the hedge pressure break. See how the volume ramped up very rapidly? You broke hedge. And then when you became at the cat active interface, the volume became unstable. This is what we taught you guys in yesterday's class. We talked about catalysts yesterday, right? Notice how when you are at the catalyst and breaking through the cat active, you create massive amounts of hedging and margin calls. This is that high volume. This high volume is so big, it's almost as big as the open. It's bigger than hedge pressure. That's why catalyst is ranked second on our list of highest priority stuff. The volume is higher on the list. Next catalyst is second on the list. They are ranked by highest volume. There's your highest volume. See, I like when we teach you guys this stuff and you get to see it live. Does everybody understand here that this qualifies as catalyst? No offense to your handwriting. Bro, my handwriting is so bad. I know. So are we all good, right? Everybody see this, right? There's this big volume spike here because the catalyst is active. That's why I don't trade when they're active. Okay. So far, right out the door. And this is how I piece together. Like you might see on the stream, like I just draw a green line, but it's actually constructed by a bunch of stuff. So the first thing I did was I drew that. How do I come to the conclusion that we could be down there right today? Okay, so number one, this indicator takes us down. Everybody understand that? And we'll train you on this, by the way. So I'm going to draw the pieces, then draw the final thing here. 1A hedge break, which catalyzed the market, self-catalyzed, created a potential catalyst scenario. Now, the way that this works is an event is cool to trade. Event is okay. Event above, cat below. So I sit out down here automatically. I'll trade up in here if there's a pivot to trade off of. The problem is there isn't one. Okay, number two. This guy right here. down here, bull zone bottom long on a BSU is my favorite trade, which is a trade that goes from here to the halfway point of here and here. Call this a BSU. Bull zone bottom. This is my favorite setup. So then I drew this piece right here. When we bounce, when we get to the middle, resilience is less than 0. That's why I drew it like this. You guys remember? I drew that. I assumed resilience would still be less than 0. I'm drawing that. So this morning, when I drew all of this, that's how I came up with that conclusion. We'd fill the gap. The market would try to test. It would hit here. And then if it's still less than 0, it will fail and continue to sell. Now, this might go back and fill the gap. If it does this, the catalyst line goes away forever. But here is what I'd like to see. Res is greater than 0. I'll take the trade from here to there. This is an option. It's less than 0. It's a short off the blue. I don't take the short off the blue. A lot of people here do. I don't. I just sit out. You want to see the puppy? So you write really well. What do you use to write? Well, no, I have a tablet right here that I need to like turn back on because my tablet has been like not hooked up for a while. It's usually better when I write with a pen, but let's go. So everybody see today, right? The problem is, as long as this anchor point is not touched, it's an event. Once we go here, it's no longer an event. Then I can trade anywhere I want at that point. But if this continues to fall in the no trade zone, I'm likely not to take that trade. Again, I don't normally trade when catalysts are active. The catalyst is active down here. Right now, event is active. So is everybody, are we clear now? If you haven't seen it live, I'm so happy whenever we teach something and like, then it's happening, right? So does everybody see, like I took all of our stuff and I pieced together what I drew off to the right. Literally right here. If you guys rewind the stream, right here, I drew this. And that's what we're going to teach you how to do. And now I'm like, I've eliminated, now what am I going to do, right? Well, let me X out on the chart when I don't trade, right? And I'm telling you there's a reason for this. If you guys don't trust me and y'all watched the Elite Trader Funding contest I just had, I had like 2 losing days in the month, 80% win rate with like hundreds and hundreds of trades. Because I sit out when I know the volatility is going to be crazy and maintain drawdown this way. So I'm not trading here unless we clear out the event, which means we need to touch this first. So I'm sitting out here. Inside of here, I've got no long pivots. This would be 1 if res is greater than 0, and it's not. So on the way down, I've got no long pivots. This was a long pivot, but with resilience less than 0, hedge pressure break was predictable, right? So my long pivots, one by one, have been eliminated, and my only remaining long pivot from here to there can't be traded. So now, within 3 minutes, why I say I'm sitting out, you guys may not know, you know, chess players, right, 20, 30 moves ahead, you may not know that I'm able to do that. So just watch the stream and maybe you can see me do it and you can learn from that. Or just, you know, steal my idea. But the idea is I chose to sit out right here. Even though I might actually have predicted the entire day, I could have not predicted. I could be 100% wrong too. But I can see the cards in front of me. I can see the cards about to be dealt. And if you go through our classes, we'll teach you how to do this. Or not, just join the Zoom call. It's only for Black Friday. We made the Zoom calls $20 a month. That's it. And you're live instead of like the minute delay on YouTube. And like I said, we do this. If what I drew out here happens, you guys better go tell your friends what we've done. We've created a system where you can draw on your chart. What happened? I'm gonna decide if you want to check it or not. Now again, stock market's random. Let's be real about that. But these are all exploitative moves of arbitrage. All right, any questions you got, Bob? Patty Rogers, mouse. Really white, right? Well, what is catalyst? Oh, let me. This is the class we taught yesterday. These levels generate my entries and my exit. These are my entry exit targets. That's all I use. 100%, James Sean, you nailed it. So most of our trades, I look for 1.5 to 1 or greater. But some of my favorite trades and easiest trades are all 1-to-1s because they have a 90% chance. Right here, let me show you. This here to here is a 90% scalp. It works 90% of the time. It's also a 1-to-1. So these are actually some of my favorite scalps, and you'll see me do like this trade like 8 or 9 times a day if it happens. Trading inside liquidity pockets, one of my favorites. And it is a 1-to-1, but it's repeatedly a 1-to-1. So I just smack it all day long. So I usually don't try to take 1-to-1 trades elsewhere, but that one's really strong. I'm in any competition this month. I am doing no competitions this month. TradingView wouldn't let me enter because I was late. But I'm going to enter the next one and clean the floor. The CME group is hosting the Trade Against a Pro contest. I did that plenty of times in the past. I'll probably do it this one. It starts in December. Pro this time is old Scott Bauer. You might have seen him from all the trading infomercials. Before influencing was popular. Old Scott Bauer. I don't know the guy, but he's one that he used to have these like YouTube trading infomercials, like join his prop firm or whatever it was. So let's go smack Mr. Bauer around in the contest. Seems like a nice guy. I don't know him though. He's the pro in the Trading Against the Pro contest. James, any questions that you have though about what it is? Yeah, so essentially we have 3 different techniques here. If you guys don't know what Rocket Scooter is, there's a really cool video I made that's designed as like an introduction video to what our group is all about. We created a new type of analysis that gets rid of a bunch of things that you guys used to use. We no longer use candlestick patterns. We no longer use chart patterns. We no longer use technical indicators. We no longer use multi-time frames on the chart. I will never change this to a different chart. We've gotten rid of everything that you're trained to do. I leave my chart on a 1-minute chart. I never do anything else. I never use indicators anymore. I never use other time frames anymore. I don't care what the candles look like. I don't even use historic data. Even on top of that, I don't even use any historic data to make my decision. I don't care what happened yesterday or the day before. That might seem impossible to you that we've created a strategy that doesn't use anything. You were talking. We no longer use chart patterns. We no longer use technical. Let's not hear my own stream here. Okay, let me give you that video. I was trying to get the link to the video I posted. Here it is. And then this one. This is the video I made to go over it. But the idea is that positional risk analysis is a whole new ball game. It's looking at the current state of people's positions and forecasting order flow. Options tell you where people are positioned and where their risk is and when their risk expires. So it's not only telling you where people are positioned now, but it's telling you how they're going to be positioned over the course of time. With positional risk analysis, you can do a lot of things you can do in technical analysis. Number one, let me show you the number one thing about technical analysis is this puppy. This cute little guy right here. All right. Y'all want to meet Pickle? Because I'm going to go get him in about 10 minutes. All right, you see my little pig? One of my little piggies here. Look how cute this guy is. All right, the puppy's coming. Puppy's coming. Couple things. With positional risk analysis, you do a couple of things. Number one, one of our tools called monthly maps. I can say the market's likely topping here. I'm not bearish this market. This doesn't mean I'm shorting. Okay, let me read it. It appears if monthly maps have revealed that the market is top for 2024. The market, I have been bullish, and now I'm finally saying the market is topping. One of our tools can look out up through March of this year. It's next year. This is 4.5 months out. This is forecasting how positional risk changes over time. What's cool about monthly maps is it's using options to forecast movement in futures and movement in SPY, movement in QQQ. Give me one more moment to... Again, this is an exploit we created in options. Let me show you kind of what it did. And I always kind of pull up this chart, but to show you that I have history of all the tweets when I make these calls. I use this to forecast major pivots in the market. This is one of the things we'll train you guys on. Remember, there's really no actual entries here. Oh, let me make this a little bigger. What? Hold on, let me pick the picture here. Post-COVID, everybody said a recession was coming. I said in 3 or 4 years, we're going to 6,000. At the top here, I said futures suggesting downside. This first time, as long as I remember, I'm seeing a possible short-term correction. Volatility is taking over, and sidelines will be a good idea starting now. At this particular red candle, we said that the rally was over on this day, on that tweet, January 5th. On this day, this was... Oh, shoot, I didn't take a picture of the date. But this was on this day, whatever date that was. Here's a 2-month bear market rally. I use that same monthly maps trick to predict a 2-month rally. Only 2 months, and it was exactly 2 months. And then it stopped. Literally, exactly 2 trading months. Down here, I'm calling a bottom for 2022 on exactly this candle. When everybody... I only make these big calls at the big major pivots. I don't do this every week and delete the ones. I never deleted a tweet in my life. You can go back and look. Go to the Wayback Machine. You will see these are all tried and true. Right here, when everyone said the sky was falling, I'm calling the bottom for the market in a rally through January from October, and people thought it was insane. And I was right. And here I said the recession is over, and we've gone from 45 to 6,000. And here I even said that the market was going to rally through October. When I got to the summer, because in October I said in the summer is when we're going to challenge for lows again, probably. So October till the summer, and people thought I was nuts. I was on podcasts with people from all over the place. Thought I was nuts. The positional data just reveals these things. Right here in October, we said, in July, we said the market's going to rally through October. We said at the top, the double top was going to continue to go. Anyways, so the point is that we're utilizing positional data to look at pathways in the market. One of our major tools called monthly map allows us to do so. Little guideline that goes with that. And again, you guys get out, and this works for any stock, any option, anything with options, any stock, any ETF, anything. You guys can use this. Again, in the old habit of what it is we do. Don't forget, we have a drawing today for 2 lifetime memberships. You don't go anywhere. Well, cheat sheet here tells you how to read this. Now, again, this is... I'm not going to delete my trade plan. Actually, let me just remove it so it's easier to read. All right. So in this one, it's like a little guideline on how to read this. Not hard to do. So it's like step 1, 2, 3, and 4. Number 1, are we trading in a bull zone or a bear zone? Well, over time, it looks like we're trading in the dark gray. So we're in a bull zone now. Are the bulls longing more or exiting their longs? Well, when it slopes down, as it's sloping down, bulls are longing more. So it tells the story. We're currently in a bull market, and the bulls are longing more between now and January of 2025. Cool. What are the bears doing? The people short in the market. Well, the bears themselves sloping down, exiting positions. So we're in a bull market where the bulls are longing more and the bears are squeezing their shorts. This is a very strong bull rally market. So how about the space between the two? Is it getting bigger or is it getting smaller? Oh, you can't see this because of my photo. If it's getting wider, volatility is increasing. It's getting narrower, volatility is tightening. So non-volatile and then volatile, like leading into the December Fed meeting. So liquid market. Here's the story. It's a bull market where the bulls are longing more and the bears are exiting positions, and it's very liquid from here. So that is exactly what I use to forecast pivots in the market. Now, why am I saying it's likely a market top? Because one more consideration to be taken. Because of all of this, does anything I just said tell you that I'm bearish this market? Everyone in chat, type it real quick. Everyone in YouTube, type it real quick. Am I bearish this market? All that sounds lovely. Very lovely. Now, the next question is, how bullish am I? And there's a couple of hints here that I'll walk you guys through. When you start to see bear zones appear, which is this light gray, at the current high or above the current price, the market is starting to develop illiquidity and bear resistance. These are bear pockets. Pockets of bears. Bears in your pocket. So we've now here developed bear resistance, which is why over the last 3 days, I've been saying this when I made that tweet back here, that we've likely topped the market. And so if that's the case, and it just kind of like does this for a little bit, there's going to be another tweet for that big photo I've made where right here I'm saying it's probably the top. And I have not said top at all since December of 2021 was the last time I said the word top. It's in the tweet. I have not said market top since then. I've been higher, 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 going to 6,000, going to 6,000. And now I'm saying it's probably a top. It's small in the S&P. It's worse in QQQ, which is showing that, you know, the hype of the tech rally, not so good anymore. This bearish positioning all the way through here is actually giving me a timing on the top as well. Not to say it can't turn around and be different tomorrow, but look at the bear zones and NASDAQ. Does everyone see that they're much more prominent? So it means this is really heavy resistance. And while the NASDAQ is still bullish and shorts are squeezing, they're squeezing into this bear resistance as they squeeze. And then it becomes more volatile inside of here. And you get this. A market that's going to have a hard time advancing, but it's still so bullish, it's not going to crash. So when you delete that, you end up with what we like to call a megaphone. And the classical megaphone pattern, it's one thing for you guys to pick up a chart and see it as it's happening and then bet that it's going to break out, because megaphone patterns, as we know, are traditionally what? Continuation patterns, right? They're not reversals. Rarely are they. Of course it's a continuation pattern. That monthly map is bullish as shit. But what you tell yourself is, not until January. Oh, you can't even see the bottom here. Higher. There you go. That's how you can use positional risk to actually forecast the market pretty well, actually. Because it's not using any kind of voodoo or mumbo jumbo. It's using actual active positions of people and telling you when they're bullish and bearish the market. Stop trying to auto adjust. There we go. So now what's kind of neat is if I end up being right in the next 2 or 3 months, there's that. There's your lows. We're inside of here. What'll be kind of fun is to watch. Now, again, we're going to watch this change every day. It's slightly different. But basically between here and January of 2025, the market is likely to become more volatile. We're likely to hit resistances. And if you guys pay attention to some other training here, as you see, we're above triple B on VIX, right? Which implies volatility for the month. Are you guys starting to really get it now? Like I said, you guys are watching. You can learn how to do this. That's the best part. So we always know that this is a high cautionary signal of increased volatility, right? So now that you know that, we do that pre-market analysis or post-market analysis every day, right? Pre-market. We look at this in the morning. It's reprinted. So now what you can do, making a little good trader, making your charts. What you used to do as a trader, right, is what you used to do as a trader, and I bet you've all done this. I'm going to teach you something cool. How many of you used to go back in here? How many of you used to go back in here and draw past data and go, well, let's go ahead and just do this because that's kind of neat. And let's do this. And let's do this. Let's go in the past and try to draw the future. And then you're like, oh, let me guess what the market's going to do. But did you ever think that somebody would create a way that you would actually never have to look in the past again? How about instead of looking at the past, going in the future, you look at now. Actually, through January. You look at now. And you just draw the future without looking at the past. Oh yeah, don't forget the moon cycles and the sunspots. The vomiting candle, elephant, snake, butterfly, Elliott wave, harmonic, noise. What is the degree of the angle between here and here? Oh, this is a 62.3% angle. It implies cystis. Listen, guys. Guilty. We used to use the past to try to forecast the future. Do you want me to disprove how silly that is? Where you bought yesterday as a trader? Is it at all affecting where you bought today? Everybody, answer that question. I'll tell you how the past has zero predictability of the future. Famous trader, Jim Simon's most successful, profitable trader in the history of trading, running the most successful hedge fund in the history of trading, said that the market is nothing but a congestion of Brownian motion, which means random noise that you can't predict. And I tend to agree with him. We built ours on that particular thing. Not only can you not predict it that easily, but no way that what you bought yesterday is affecting where you bought today. So how come what everyone did yesterday and last month and last week somehow is going to forecast what they're going to do today? Are you buying again? You added here on your 401k and you bought there again. Because you bought there and there, are you going to buy there? Maybe, maybe not. Is everyone going to buy there because they bought there? Probably not. You probably just invested somewhere. Day trade you made yesterday because you bought in long. Half of you were longing one day, shorting one day, halving one day, longing one day, shorting one day. That's how most Wall Street is all over the place. Nobody's repeating behaviors based on past hysteresis of what they did yesterday. Adrian does the right thing. He trades his horoscope. He gets out and reads the moon chart. The point I'm making is that the past will never predict the future. And we got rid of all of that a long time ago. So number one is that liquidity maps can be very useful. There's my little prediction here. I drew too much. Where's my green? Wait. Draw too much. There it is. Okay. So using monthly maps to forecast bigger moves. You can run this for Nvidia. You can run this for GameStop, for anything. Some of our other setups basically use arbitrage. Like this number right here is telling me that the majority of market cap, this says 0.69. It's number between 0 and 1, and this is your bull bias indicator. 0.69 means the market is still strongly bullish. In the greater market, we have an analysis type called greater market. And this is to tell me if I'm just bullish or bearish in general. And why you guys really almost never see me shorting the market is because the greater market's been bullish for many years. Very rarely has it shown bearishness in a while. So greater market, monthly maps, right now, our analysis of that shows it's bullish really strongly. Bullish with top. Okay? Which means choppy and volatile, but not selling off, not rallying. 3 indicators help me decide if I'm bullish or bearish. Number 2, is this ratio greater than half? Check. The stocks themselves are bullish. This is the options positions in SPY, or QQQ or whatever. The index itself is bullish on its own trading. The stocks themselves are in bull zones and bullish. And MHP, the last consideration. On NASDAQ, oh boy. Oh, dude, it changed the text size whenever I changed the text size on those charts. Okay, so MHP. We are below MHP and NASDAQ, which is bad. So NASDAQ is showing the weaker of the two. And SPY is above MHP. Now, we only look at SPY for this analysis, but all 3 things are bullish. Good, good, good. I'm sorry. Greater than half. The SPY zone monthly hedging, which is a month out, is good. Gamma positive. That's it. My entire analysis of the market was just done in like 3 minutes. I don't read any news. I don't look at anything. I don't listen to CNBC. I don't look at charts. I don't read fundamentals. I don't read earnings reports. I don't join earnings calls. I don't listen to endless podcasts. I do these 3 things, and I've determined that if any one of these things are bullish, I'm bullish. As a matter of fact, today, all 3 of these things are bullish. I'm not only a bull or very bull, but extremely bullish in this market, which means the market's going to have a hard time selling off. We found the top, but we found bullish pressure to go with it. So the market's going to have a hard time selling off. Because of that, let me re-ask the question I asked 30 minutes ago before I started talking. Ready? Am I shorting this market? I don't just make stuff up on Twitter. So you guys understand. Everything I say has got like 15 moves packed into it. Oh God, why are there ants all over my... Dude, there's an ant infestation in my house right now. I just had like 8 ants on my arm. That was crazy. I don't know what they're coming for. Oh shit. Yeah, I know what they're coming for. They just got my bowl of eggs. Oh, hold on. No. Dude, we've had ants come in here. It's been so crazy. The ants found the eggs. No, I was sitting here. There were like 6 ants crawling my arm. It was so crazy. Did y'all see it? I don't know if you could see it on the camera. I felt one of them tickle me, and I looked down, and there was like 6 of them just scurrying around. They found my eggs. Okay. Anyways. So just so you guys know, like on Twitter, whenever I make these tweets and I say like I'm not shorting the market, this is actually why I don't just say it because I'm guessing. And when you use Rocket Scooter, we'll teach you how to do this. Making like, you know, sounder judgment calls, right? And again, let me just go ahead and tell you that when I make these posts, this stream is explaining where it all comes from. Right, so I say it appears if monthly maps have revealed that the market is top for 2024. We showed that. Unless something changes, we're in for a flat and choppy final 6 weeks. The red shows the expected supports and resistances over time. Choppy megaphone pattern. But then I clarify, this does not mean I'm shorting, because remember, the market's very bullish. Oh no, I'm just letting it chop around and grabbing dips. January onward, market still has a bullish flavor. Say yum. So the kind of thing is that in a greater analysis, this Would you believe that this analysis was made without using any technical analysis? No charting, no candle patterns, no horoscopes, moon patterns, no Twitter gurus, no TikTok gurus, no CNBC nonsense. This was made looking only at data, positional data. Are you allergic to ant bites? Yeah, these are like little, they're like little black ants. One of them bit me the other day, so let me get one. Let's see if you can see him. Here, come on, get over here. This motherfucker's fast. Come on. I was trying to pick you up to show you to the stream, but I had to send you to Valhalla because you're moving around. If you guys can see it. Little big guy right here. Focus. I don't know if you can see it. On my finger right there. This finger. Little black ant. He's now dining with Odin because I sent this motherfucker to Valhalla, but... Dude, we've had ants literally coming in since Halloween. iDoc, we carved a pumpkin. And she put the pumpkin in the trash can and dragged the trash can down, but the trash can had a hole in it. And dripped pumpkin juice that leaked under a rug. And then ants just came over and infiltrated. We lifted the rug, there's thousands of ants. So they basically like chemically drew a path to our house and they go, there's food here. Now we find ants everywhere. And I've been trying to fight to get them out. But here's the thing. We're moving in a month, so whatevs. Used to do landscaping. Ed, that's horrible for your allergic to ant bites. Oh, that sucks. Yeah. Now they're like scurrying because I took away their food source. Now they're like following their chemical signal. I'm like, where's the food? So I gotta do, hold on. I'm gonna spray soap. Oh, they're getting up. They've been aggressive, so we've been spraying to get them everywhere. All right. Anyways, back to like talking about what it is we do. There's a couple things. Liquidity maps help us provide certain types of setups. In futures, these are back tested. There's a couple probabilities that go with futures. These green lines are populated every single night. 8% of days close below, 4% of days close above, and 88% of days will close in between the green lines. These are back tests. Under ideal conditions, 90% of the time, you will open and close on the same side of this orange line. 90% of the time. That's in futures. And SPY and equities, under ideal conditions, open bull zone, close in the bull zone, 90% of days. Now, this is no longer ideal condition. Some of these lights are red, so it's not ideal. Non-ideal is roughly 70% of days. So these all add to like me making a trade plan. 70% of days will bounce off of that line. 88% of days close between those green bands. I drew the upper one here. So a lot of our probabilities here. Now we're watching me like slap myself all day long. It's gonna be really funny. All right, so 70, 88 plus 8 is 96% of days will close below the upper green band. So any questions as to why I have the market moving this way and this way over here? Got it to where it really is supposed to be. So my greater thing is, market's big and bullish over the long haul. Yeah, but there's a market top in. Okay, we open up. The market's trying to rally. I'm not longing to the top of the 3-month market top. Instead, we get signals that this is another indicator that's looking at the sum of the market cap in the S&P 500, which is filling its gap this way. If the stocks, if this number is less than 0, then it's predicting what happens in this box. Oh, there's my foot. This is going to be fun. IDOC! The ants were all in my bowl of eggs. Thousands of them. I was using my mouse. And there were like eight ants on my arm. And they're still everywhere. They stole my eggies. Yak my eggs. Ben, don't scare me like that. Ants are trying to teach us bad things. You know, they're doing bad things. Okay, so resilience is an indicator that predicts if the S&P or Nasdaq's gap is going to fill or not. This is the open. This is yesterday's close. And if the stocks are filling their gap to the downside, just this number less than 0, it moves through the box this way. Because you move through the box this way, it has to break a gamma level on options, which is called hedge pressure, which creates a catalyst that speeds the market up. As you see, when we broke hedge pressure, increased volume came out, which sped the market up. And now we're in an event where there's likely a catalyst. Did you guys see me buying any of these dips? No. You see me doing anything but sitting out? Yes, this is all my trade setup. And the one final rule here is that Matt sits out during any catalyst. So while this is a really strong long pivot here and here, I tell you guys, Matt doesn't trade when a catalyst is active. So while I did draw what's going to happen, greater understanding of the market is that we're bullish into a top. My greater understanding of today is that we're selling pretty hard in an untradeable region. So I said, oh, more protein. No, because even if I tried to eat the ants, they're moving too quick. These are the fast ones. All right. Puppy reveal. Want to see the puppy? How many did I eat? Probably a lot. All right, you guys. All right, we're done trading here. Everybody go to YouTube. We're going to do the giveaway. Everybody go to YouTube now. We're doing the giveaway. Go here. I'm going to give you like 30 seconds. Everybody go to YouTube. Go on YouTube. Leave a comment. I'll be right back. Puppy reveal. And we're going to do the giveaway. You guys go to YouTube. And today's great because we did the Catalyst class yesterday, right? Oh, baby. I know. I'm getting the dog. Hold on. Dog reveal. Let me post out there. All right. Let me make sure I let everybody know. Let's get this going. Let's go here. All right. Make sure I draw right back on my chart again. Hold on. And the Zoom call, it's like a... Where's my pencil tool? All right. Puppy reveal. Everyone hit that like button. Might get a win, Kevin. You guys might get wins. Ready? Puppy reveal. Hang tight. All right, you ready for the countdown? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Ooh. Oh. Wait, hold on. Wait. This is a pickle! Pickle! Say hello to everybody. He's still a little nervous about, he's very playful upstairs, but he's nervous when we walk down the stairs. He always gets like real shaky. Hey, buddy. Oh, Pickle. Pickle. Hey, buddy. Good buddy. Good boy. Good boy. It only took, like half an hour for him to become acclimated with the house. Like, he immediately is like needy for both of us. This guy is like already part of the family, but he gets a little nervous sometimes. I get the microphone out of the way. Hey, look. What's up, buddy? Hey, buddy. You hate the stairs, huh? You walk up and down the stairs, he gets a little timid. Let's put you right here. You stay right here. What is all of this? You've never seen any of this before. Oh, wait, you guys can't see. Hold on. I can move the camera. Buddy. Hey, buddy. Oh, look at this. Look at this. Oh. Gonna say something in the camera? He's like super cute, huh? Hey, buddy. You understand, like the lights, the camera. There's a lot going on here. Okay. I also just woke up from a nap. Name him ES Mini. Oh, that's so funny. Oh, buddy. Tired? Yeah, this morning when she walked with him too, he gets like, when he walk up and down the stairs, he gets a little like nervous from the walking with the stairs. He's not used to stairs. You get a little shy. We don't need to take you up and down the stairs anymore. You get older. All right, so this is an Irish cream dachshund. It's like a little miniature. And also, you're not supposed to hold them straight up because like it's very uncomfortable for them. So I'm kind of sitting at an angle. But so I'm like leaning back. He's like laying on me. You guys can't tell. So you're not supposed to hold the dog upright, by the way. So kind of like a little miniature golden retriever. Very fluffy, very furry. Very playful and friendly. Why are you nervous, buddy? What's wrong? You shaking? What's wrong? Wiener Schnitzel. So basically like a wiener dog, but it's like a longer, softer fur and like a light cream color. What's wrong? Yeah, new surroundings. You haven't seen this office yet, have you? All these lights and it's dark. Well, he's like super brave though. Like the first minute that he got into the his little nursery he built, he's just like making his home there, playing with the toys, crawling around, jumping around like super crazy. Very adventurous dog and quick to acclimate. Like in 5 minutes, he's gonna be running around like crazy. You all right? We first got him in the car. He was whining for like a couple minutes, and then after that, he was just like looking out the window. So, what a nice little boy. Oh, you're back. You're back. This is his favorite little toy. Oh. Anyways, it's Mr. Pickle. He doesn't realize how lucky he is to have his new home. I know. He's got the most loving parents ever, though. We're such like animal lovers here in this house. All right. You ready to do the lifetime giveaway? You want him to do the lifetime giveaway? Hmm? 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 You want to announce the winner? Oh, you're back. You're back. There you go. He's back. This is the normal guy I know. Look at him being crazy, wiggly. Oh, you're not scared anymore? New environment, huh? Yeah, but you're okay. Out of here. He's back. He's like, all right, this ain't so bad. We're good. No little guy. All right. Look at that tongue. All right. Back to trading. All right. Let's see if you want to like just chill here. Oh, what? No, there's ants. Let's not put you here. Bad idea. We'll let you sniff around for a little bit, and I'll kill the ants if they come up. How about that? What is all this? You pee on my desk, though. We're gonna have words. Okay? We're gonna have words. You wanna sit in my lap? Alright. So, the way the contest is gonna work, I'm trying to find the easiest way to do this. Basically, if you sign up for the monthly membership, after November 3rd, you enter into a drawing for 2 lifetimes. Okay. So we're going to do the random number generator, and I'm going to pull 2 random numbers, and I'm going to go through, and I'm going to count the membership number. So example, if I draw a 5, this is the only way to really do it, because this is all on Stripe. This is going to be like harder than the one with the bot, because I need to actually preview our membership, all that. So anyways, if it draws 10, I will go to Stripe and go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And if I draw that, I will send you an email. And on the screen, instead of revealing somebody's email, I'll be like omitting some of the letters. Okay, cool. Good job, buddy. I'm just being super cute. I wonder if I could lower the camera just a little bit. I don't know if I can. Oh, maybe it's... Oh, that's good enough. Ready to go? You want to hang out with me? You want to sit in my lap? Here, just sit in my lap, buddy. All right. All right. Essentially, and we do these every once in a while. We make it fun. If you sign up for our monthly membership, we have this Black Friday special. First month, half off. If you like what it is we've been teaching, feel free to sign up. Our training, there's a reason our training is the way that it is. Let me show you what it is. We do positional risk analysis. We pioneered the field. There's a lot of copycats out there trying to do something similar. We're clearly the leaders of that part of the industry. Hedge pressure. We found some people trying to do similar stuff that have kind of learned from what it is we've created, but nobody's come even close. Nobody's created an actual gamma squeeze point for market makers. We're the first in the world and the only in the world to have done this as of this date. You can read customer reviews from actual customers and rocketplace.com, rocket.place/Matt. Go here. I invite you all to read the reviews. If you're a learner trading, futures trading, trader funding programs, come learn this stuff. In case you guys don't remember, I am the winner of the Elite Trader Funding October competition. I got first place. I have been promoted through the ranks there to be a live funded trader. I'm trading with real money, which is one of the rare things to do with the prop firm. Invite only if you're one of the best traders they have. So we train you guys on trading. We train you on how to beat trader funding programs. We train you on how to game the system in your favor. How to beat the casino using the edge that you can have in those things. We try to train you how to win these things. These are customers. You can read everything he said. It's 4 and 5 star reviews, pretty much. Actual customers on what they bought, and they just leave their reviews here. So, like I said, I'm a terrible sales guy, but just go listen to what people say. All right. We put a lot of time into training. We do an hour a day in the morning on Zoom. Then we do an hour at the afternoon going through our 20 days courses. Like Rocket Scooter is great. There's nothing like this program. Matt trains everybody, yada, yada. Immediate value, best thing I ever bought. Absolutely nothing like this, etc. I feel very nice. You guys can check out the trial just for 1 month. We do a program. Again, this is going to the drawing. There's a 1 month. You can check it out, half price. If you don't like it within 3 days, you get a full refund. We tell everybody that, so you can just try before you buy. You get our trading platform, all the indicators, and all the training to go with it. Hey, Pickle, what's up, buddy? We teach you the DD philosophy. We teach you bull zone, bear zone philosophy, liquidity maps, how resilience, how to draw longer term trade plans, the greater market analysis like we showed you. And all I do is futures trading. That's all I do. I'm a competitive futures trader. Like I said, I was #1 in the Elite Trader Funding Contest. I competed in the Robbins Cup. I peaked at the top 5 on the leaderboard there in the world of the Global Futures Trading World Cup Championship. So there's a whole, at least a little bit of transparency to what I do. If you're looking to get serious about trading, getting coaching on trading, the tools that this community has is really, really good. And we invite you to check it out. Okay. Lifetime access is full access to the platform and all the new stuff that's coming out. The next stuff that's coming out is going to be probabilities printed on the chart of each particular setup, with dynamic changes to the setups, removing some of them if they don't apply, adding those numbers we talked about, putting arrows here with actual numbers so that you have the odds of those movements happening printed on the chart based on the backtest. It's basically live real-time backtest. It's $99 for the first month and $199 for each month after that. But even for 1 month, Abe, what I tell people is go through the courses within a month. We do this thing every day. We do this. It's called 20 Days Profitability Mindset Masterclass. In 20 days, what we're going to do is teach you everything we know. And we go course 1 to 20, 1 course a day. Then after course 20, we start over and go through them again. And again and again. And we cycle through them. And right now, we are actually on course 20. What's wrong, buddy? What's wrong? And starting tomorrow, we'll be cycling back on course 1. So you get to start all over from the beginning. We teach how to read the greater market, how to find market tops and bottoms. We teach how to do position risk management, which is really the core of the courses. how big to bet against the risk you're taking. The reason you don't make money as a trader because you're betting too big for the risk you're taking. It's a course on how to bet properly. It's not a course on using charts to predict markets. That stuff is stupid and a waste of your time. I'm not even telling people to post something in chat, but it looks like some of the folks here are saying something. Did we already do the puppy reveal? PJ. Oh, I'll show you pups. Hey, buddy. Full hair. I know. Let's put you flat because you're a dachshund. Dachshund hates being upright. Look at the camera. Oh, his heart is racing. He's nervous. He doesn't like this. Buddy. Oh. All right, everybody get your love on Pickles. We'll bring him back later. I want to put you down, but you're definitely going to pee on my rug, so. And Brian, what's up? Brian, you see Pickles finally? Look. I know you saw the post on Instagram, but. Pickle. Blub. All right, let me take him back. We'll do the drawing as soon as we get back. Come on, buddy. Look. Special dachshund or any puppy holding trick in general. You should always hold a puppy like this if you've never been trained on dogs. When you hold a dog upright, their spine is not supposed to dangle. That's the equivalent of you bending backwards. Don't. So doggies, especially puppies, arm underneath them. Their legs straddle your arm. Their back legs and their front legs hold their chest. Nice and certain. Now you feel better, huh? Say goodbye. Say goodbye to everybody. Say bye. You like that? He's like, understand these lights. Good boy. All right, drawing in a second. Hold on. We go upstairs. Bye. Bye, everybody. Dude, totally camera shy. Totally. The minute I put him back down in his playpen, he's like, it's Vidoc is here. It's the stairs. The stairs kind of creep him out a little bit. Walking up and down the stairs. So let's minimize that till he gets a little older. All right. Yeah, he was sitting here for a little bit. All right, you guys ready? Is break north of the green line a long entry? Okay, so let me tell you this green line really quick. So Catalyst class basically just shows me that I sit out, right? Above here, longs are possible. Yes. If there's a pivot to long from. And right now, there is a pivot to long from, which is here to there. Res is greater than 0. One may choose to long from here to here. Is actually a good possible setup. As the event is active, I'm cautiously trading small. MHP is broken on NASDAQ, so I'm cautiously trading even smaller, which means I'm still sitting out. That's the answer to that. There is a res greater than 0 scalp, but it is a very, very, very small because the event in the MHP break is kind of like strong pivots only. Remember, MHP breaks, we take strong pivots only. And this resilience is not considered a strong pivot. Strong pivots only are bull zone bottoms, bear zone tops, and MHP itself. Because QQQ has broken MHP, there is no strong pivot to take a long off of inside of this range. That is so funny how the text is just big. Let me actually make the text smaller. Okay. Does that change the text for all of it? Yeah, it does. Okay. So while QQQ, MHP break, strong pivots only, Matt's favorite trade, which is the BSU from here to here, already took place. You'll see that? So while I didn't take this trade, that's the one we talked about earlier, which was what we call Matt's favorite trade, right? So this morning when I drew like that and then that and there, that's that leg. And so while that scalp is possible, it was still too risky to take. I didn't take it, even though it looked like it took place. Okay, so courses 1 through 20 are all about risk management. And course 1, I promise you guys, if you sign up, course 1 is such a mind-blowing experience for some people. I get emails from people immediately after course 1. I get messages from people after course 1 saying, why are you not going viral? This is so different. It's like you have basically undone 5 or 10 years of my bad habits in a single hour of my time. And I'm like, I'm glad to hear that we open people's mind. So basically we teach you to throw away technical analysis, to throw away charting, to throw away candles, throw away shapes, colors, lines, emojis. All this nonsense on the chart does not do any predictability. And we actually teach you the only things that can be predicted, which is finding out where traders will be and finding out where volume will be. As a matter of fact, it is so accurate to calculate and predict where volume will be. I even teach you how I do it. Anytime you touch an orange or a blue or one of these bottom interfaces, you are guaranteed to have volume spikes in the market each time. Can you guys agree that I'm not making this up? If I find where traders are going to be, I'm only acting here, here, and here. Everything else in between, I'm not touching. I'm only picking the highest volume pivots to trade from. Every time we touch, I get this feeling. And every time we kiss, I reach for the star. But I don't know how that goes. So the point is that I've narrowed down trading to 3 possible spots to make a choice from, and everything else in the middle is noise. You name a stock, you name an ETF, you name anything. Positional risk is something that you can use for everything. This is a group started by a team of engineers, data-hungry folks who are interested in learning and understanding the market on a more of a statistical and probabilistic sense. Here's your hedge pressure. Here is your volume as you approach it and trade near it. Volume is increasing right here. And there's your bull zone bottom volume right here. Okay. I can show you where the best volume will be. If you don't realize what it is we've done, and this is, now we're going to do the drawing in like 1 minute, is that if you look tomorrow, you guys don't know what a volume profile is, right? If you look tomorrow at a volume profile that will include today's trading, you will see what's called a high volume node here. Does everybody understand? There's high volume at this level. You guys all understand what high volume nodes are? So tomorrow morning, you load up a volume profile. It'll show this, and then tomorrow trading, you're like, oh, well, I'll probably trade here because there's high volume. There's a high volume node. Chat, we understand? Everyone knows volume profiles, right? So tomorrow, you can load up a volume profile, and it'll likely have a spike right here. Right? To tell you that there was volume here. But if it's not snapping in your head, what we've actually given you is we're actually drawing tomorrow's volume profile today, before today's trading even took place. And I'm telling you that tomorrow's volume profile will look like this. We created the method that can predict a volume profile. That's exactly what we did. We can predict a volume profile with near 100% accuracy of where your high volume nodes. We're predicting tomorrow's high volume profile volume nodes today. There's your volume here. There's your volume there. Any questions? And I like to blow people's minds because I'm asking you, it's not scripted. Give me, chat, before I do the drawing, give me 10 random stocks and I will run all 10 of them and predict volume 100% of the time with our technique. Hit me with it, baby. And I'll do it live. Fuck it, we'll do it live. go. Now, Palantir is playing hedge pressure ping pong, but one can't argue that that right here, volume spike, that right here, volume spike, right here, volume spike through these both of these pivots, volume and volume. Let me make it bigger so you can see it. Let's just trace each one of these volume spikes here. Right here. Here. Oh, open and close, also high volume, yeah. Here and here. There and there. All through here, high volume inside of there. Now, as you repeatedly touch these things, the volume is less and less as the day goes by, but there's certainly accumulation of volume here and volume here. Volume spike right there at that spot. There you go. So playing ping pong between them, you're going to see a lot of interactability at these pressure points. So tomorrow, your volume profile is there and there. Oh, and there. We got Palantir GLD. Oh, gold. All right. Again, I'm going to just skip the theatrics there and there next. Okay, that's also probably a dark fulfill, but again. Boom. There's the tap. There's the volume. Trading around here, there's the volume. Right here, again, getting close to here, there's the volume. Your volume profile will be right around this area here. All right, next, SLV. Silver probably looks the same. Usually looks similar. Silver had a bull zone bounce. There's your volume spike there. Volume accumulating there. All right, next, GME. I do these quick. Hedge pressure, volume. We didn't get to the bull zone yet, but here's the highest volume right there. Close enough. Volume profile there. Volume profile there. Oops. Even this three sizes. You guys get it. Gap fill, volume, hedge pressure, volume, bull zone, getting close to it, volume right here. Okay. Oracle. So, but at the start of the day, these numbers are printed for you guys, and this is showing you where the volume is going to be throughout the day. Looks like Oracle doesn't have anything nearby to look at, so that one doesn't work. MSTR, for some reason, does not produce liquidity maps, and we need to investigate that. I know that's the hot topic. So we don't have the calculation for it. It didn't pass the data integrity check. Meta. A couple more. All right, we'll do the drawing just a second. Volume, volume. Bear zone top, volume. Let me actually make this bigger so you can see it. Hey, you guys know all of our pivots. Monthly hedge, bull zone bottom, bear zone top. There's your volume here. There's your volume there. We've identified where market makers are behaving, and this one is buried into the opening volume. Okay. Volume spike, volume spike. All right. And the pivots today are here, here, and here. I'm just trading from there to there every single time. From there to there every single time. If you short from here, this goes to there every single time. So there's a trade from there to there, that one. There's a trade from here to here, that one. There's a trade from here to here, that one. All right, next. Let's go. All day long. Okay, a couple more. Apple. There's no pivots nearby. So we didn't touch anything. So Apple doesn't have any. Coin. Okay, last one. Coin. All right, let's do the drawing. It's hard for somebody to say with 100% accuracy. 100% accuracy. It never fails to produce and find high volume pivots. It's never failed once. Tens of thousands of stocks every single day. It does not fail to produce volume. This is exploiting a mechanic in the market called delta hedging that everybody participates in. Until they stop delta hedging, this can't fail. Okay, NVIDIA, last one, and we're done. We did NVIDIA. Thought. Hedge pressure. Volume there. Bulls on bottom. Volume there. Questions? And also the gap fill also creates a little bit of volume there. As your average volume is here, approaching bull zone creates volume spikes as you get close to here. Here and here creates volume over here. All right, trade coming. Ready? All right. Abe, one more. All right, let's go. It doesn't guarantee direction. That's one thing we teach you guys. You can't predict the direction of the stock market. But what it does is it predicts where pivoting can be based on high volume. White line, high volume. White line, high volume. White line, high volume. Monthly hedge, high volume here. Monthly hedge here. And again, repeated taps, the volume becomes less and less as the day goes by usually. While the volume is less and less as the day goes by. The initial tapping of that was high volume. So high volume here. High volume here. Higher volume here. High volume there. So today's Cisco is pivoting here, here, and here, and that's basically it. Your volume nodes will be there and there tomorrow. Okay. 9:30, these are printed. They don't change for the rest of the day. Okay, ready for the drawing. Let's go. 2 lifetime memberships. All right, let me go back. Let me get the list. If you aren't here in the chat, you don't win the prize. That's also the rule. So if you don't win the prize, I'm going to give it to someone random. It's always been the rule of our drawings. You got to be here to win. I'll send you an email. If I draw your name, I have an email. You have 10 minutes to respond. 10 minutes. Okay. So let me know you were here. Okay. All right. Ready? Let's get the product here. Let me go to my up here. Okay. All right, so the number of entrants in today's contest. There's a lot of y'all. Okay. Okay, 1. 18, 19, 20, 21. Wait. 21. 22. 3, 4, 5. Wait, 1, 2, 3, 4, 5. 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. It's 20, 40, 1, 41 new. Wait, hell no, there's more. Okay. There are 41 people. 41 new signups since November 3rd. The monthly membership. 41. I'm going to make you guys a bet, a deal, because I was drawn to Dallas for a week, unfortunately, and I've been late doing the drawing, and I extended a little more. We'll do it again in 2 more weeks. Wait, hold on. No. 3 weeks. So what I'm going to do is if you stay a member for 1 more month, I'm going to do it again. And I'll give you a hard deadline no matter what. December 20th, we'll do 2 more. We'll do it again. For the same group of people. No new competitors. Okay? Let me repeat. Same group of people. The The same 41 people. Stops here. Okay. We'll do a different drawing for everyone else when we do another thing. 2 drawings. 2 lifetimes today. And if you stay a member, you'll stay entered. It's like a month. Let's pick a date. We'll do it on Giveaway Friday on December 20th. Now, question. Are you guys going to be traveling on December 20th? I don't want to do it like during the holidays and everybody's gone and stuff. Do we do it Monday or Friday? We'll do it December 20th. December 20th. All right. So if you want to enter for the second month, I'm going to do you one solid. There's people that joined today to see what's going on. You've got... I will cut off the sign up for like December 20th. Like I said, I'll let you guys until like noon today for like the 3 or 4 people that signed up. That's it. That's it. Just do 4 today. Well, no, we got to draw it out for dramatic purposes and exploit the YouTube algorithm for points so we get shown to other people. This is all a gimmick for views. Come on. Publicity stunt. Can't just do them all 4 today. Draw it out. It's a revenue generating publicity stunt. Completely on it. We're transparent here. Damn it. Okay. 41 people. I'm gonna draw a number. And another monthly membership fee. Oh, you guys are so smart. You figured it out. Of course. You get a dangled for variable sales carrot. But, you know, the value is there, obviously, but come on. Shameless publicity stunt. All right. So, sign up was November 3rd till now. You guys got 2 hours until noon. I'll let people, like, right now to be like, oh, there's another one. But that's it. Nobody else. So, this group of people, we'll do 2 more on December 20th. Yeah. Okay. Everyone loves free shit. All right. Here we go. Okay. Let me pick a random number generator that is not Google, because Google was disappointing us last time. All right. Draw a number between 1 and 41, and I will go to Stripe, and I have the list of ranked people. I can't show you guys the list because what that does is it'll dox people with their actual... Okay, hold on. With their actual email. So you can't do that, but I'll read out what it is. Okay, let's spin the number. This is a spinny thing? Alright, this is fun. This is fun. Okay. I found a spinny thing. No, it's not for existing members. We're going to do something else for existing members for sure. This is just for new signups, but existing members, we're going to do... we'll do drawings for stuff as well. Like, I was thinking about like a loyalty sign up. Like if you've been here for 6 months or something, then we might do like a loyalty. This is what I wanted to do for existing members. So the idea is that as you stay with us, we want to like do loyalty that way. That's kind of what I want to do next. Does that sound like a good idea? All right. Just to show you, we'll do a test spin with 5. Let's see what this does. Does this actually work? All right. I will read your name on the list. Oh, God. Woo! That was pretty cool. All right. Very fun. I just need to make sure it's inclusive of the boundary conditions. So 1, 41, we good. All right. I'm going to spin. If it lands on your thing, I'm going to count through the email. You're that order of when you signed up. Let's do a couple more fake spins. No, actually, I trust it. I trust it. It's good. And then I'll email you. You have 10 minutes to write back. If you don't write back, I will give it away randomly to someone else who was here. To be in the runner-up category of someone who was here, do me a favor and join our Discord. I want you to do me a favor. If somebody doesn't show up and get their prize, we're going to give it away to somebody randomly in today's Zoom call. So what we're going to do is you're going to go to this channel. You can see really quick. I want you guys to go to this channel right now. I want you to type in the word enter. Anybody, and this goes for anybody, existing members as well. Go enter. Type this word in that channel one time. Everyone go there and type it. We will send you a message. And we'll do the drawing again in the Zoom call. For just the people who typed in enter. All right, so that's if the winner doesn't show up. The winner doesn't claim their prize. All right. All right, click. Double check the trade here. All right, so let me show you guys something. Size looking decent. There is no high volume pivot here except for gap fill. If the gap fills, the event is over. So when the event is over, I'm going to delete this line. Just letting you guys know, today, this is highly possible. As soon as that is achieved, all the event goes away, and then we're not doing anything else. You see how today was the day I'm just not trading, right? I didn't touch this today. Diddy, click on that link above you. Okay. 10, 9, 8, 7, 6, 5. Somebody's name is Wall Street Abortion. That is hilarious. 4, 3, 2, 1. Spin. This is highly exciting. Pretty cute. Number 17. All right. All right, and I'm gonna type the email with letters redacted in chat. Just so you guys is real. Okay, there's number 1 right here. 2, 3, 4, 5, 6, 7. Oh wait. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. All right, here's the winner. That be your email. You are number 17. Free lifetime. Congratulations. $4,000. Free platform for life. All new stuff we make for life. Free training and all that stuff. All that stuff. Good job. All right. We see an email in just a second. All right. One more time. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, go. The dog should press the button. That'd be so funny if the person won a second time. Hold on, wait. Wait a minute. Wait a minute. 14. Now, again, the odds... Let me start over. That's not correct. We need to reduce. The person can't win twice. We need to spin again. And subtract 1 for any number greater than 17, as 17 is no longer a number. Oh, sorry. 1 and 41. Exclude 17. My bad. My bad. All right. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, spin. Eight. Looks like the early birds. This is so freaking corny. All right, number 8. 1, 2, 3, 4, 5, 6, 7, and 8. He's definitely not here. But the winner at number 8, believe it or not, is trades by Matt. He's not here, so I'm gonna call him and say, you won the prize, but I'm gonna Matt's we support each other no matter what. So I'm forcing Matt to give away his prize. Yeah, he's in Vegas. But the funny thing is, Matt's always been I'm not kidding. I can't reveal his email. So fucking funny. How lucky. All right. So So I'm not giving it to Matt. I'm making him give it away because I know he's not here. He's gone. But here's the funny thing. Matt's always been a member since the start of Rocket Scooter. But he recently moved to the new site when we told everybody, move to the new site. So he signed back up on the new site. So, all right. I didn't even think of that. All right. I'm gonna call him in a little bit. That's hilarious. Okay. All right. So I know Matt's not here. Okay. Funny. All right, excluding 8, excluding 17. All right. One more time. I'm absolutely not kidding. All right. That is hilarious. All right. 34. All right. That's hilarious. Okay. Here we go. Okay. 1, 7, 8, 9, 10, 11, 12, 13, 14, 15, 18, 19, 20, 21. 2, 3, 4, 5, 6, 7, 8, 9, 30. 1, 2, 3, and 4. Wow. Okay. I'm not going to say because I know who it is, but congratulations. I'm not going to say the rest of your name, but I'm absolutely sure you're here. I'll send you an email. One of our newest members, really putting in the work already out the door. So either of those people or you too, congrats. All right, so now hold on. If they don't claim the prize, we're going to give it to somebody random who goes to the Discord channel and types in enter very quickly. I've got some ants to kill in the meantime. Yeah, congrats, you guys. Like I said, we're going to do this a lot, so don't think this is the only time. Like every week on Friday, we give away 3 Elite Trader Funding, either static or once fast track accounts. Hundreds of dollars of value. We give those away. Every month, we're going to do a drawing. If you buy $250 of the Elite Trader Funding, Eval accounts, you enter into a drawing. Then we give away prizes like lifetimes and stuff too. So every month, we'll do that. Every $250 you spend with Elite Trader Funding, you must use our link. Go to the description below. Our existing members, don't worry about that. We got you covered options. We're going to do a loyalty program. Like, I have some cool ideas for prizes. Like, for a loyalty program, an example would be if you've been here for a year or 6 months, right? We'll let you roll a portion of that into your lifetime. So basically, like, you laid away lifetime. And so we may, like, 6 months times 200, 1,200, we might say, okay, we'll take that off your balance for lifetime for the rest or something like that. For some people, that would be free lifetime. That was my idea there. So existing member, we can do like a drawing like that too. We want to do giveaways because really we just want to give our technique out and get it out there. You know, supporting the platform, supporting the business, supports the growth of what it is we built. And, you know, 20 employees here, it kind of pays salaries and keeps them employed. So thank you guys for supporting the business and supporting the group. I'm sending emails to you guys. Congrats for winning. Puppy reveal, lifetime giveaway. All right. All right. Let me see you guys your emails here. I'm gonna send Matt a message and tell him he won my lifetime membership in my contest, but he wasn't here. Because I know he's not here. All right. Congrats on winning. Hang on 1 second. All right, thanks guys. That was really fun. All right. Email is going out right now. Congrats, you two. Rip number 14. Oh, yeah. Well, it technically didn't count because number 14. Whenever a random number generator is going to exclude enough subset information and draw random numbers based on an algorithm. The input is the data set of available drawn numbers. So 14 technically wasn't actually drawn. it's random and unknown what that drawing result would have actually been. Had 17 been omitted, random number generator still wouldn't have drawn number 14. It would have been a whole new output. Come on. My computer programmers can back me up on that one. Depending on the algorithm used for RNG, it likely would have drawn... James, baby, let's go. I didn't want to... I knew who it was. I didn't want to say it, but there you go. Good job, bro. Welcome to the chocolate factory. I'm giving you the keys. You're now in charge of the Oompa Loompas. I'm just kidding. Now you are now... Well, you're now joining the... Lifetime crew, which the majority of our members are lifetime, but good job. It gets more fun in lifetime. A lot of programs you can join, a lot of people doing studies. If you want to learn, you want to contribute, it's a lot. Okay. The next person hasn't responded, by the way. So we'll see. So one of the runner-up things still open. Okay. So today, it looks like filling the gap is possible. If we do tap here, everyone in chat, type really quick. What's going to happen? Y'all remember? What happens here to the event? It's over. No more event, right? Goes away completely. So if this taps here, we get rid of all this stuff, and then it's just a normal trading day again. While the event is active, you can still trade. You just have to be cautious. So trading is back on the table up here. I just have to be cautious. Res is greater than 0, so it's looking pretty good. We're back on the same side of hedge pressure, which is also looking good. It's a high probability we go from there to there, and likely high probability we go from there to there again. It's about 15 points a run, and it's actually not a terrible long to actually take from here. I should have bought at the dip, though. I'll hit it. Yep, I'm going long. The event is active, so I still trade small. Why not? I just convinced myself that's a good idea. Not the worst idea in the world. The event is active. I still trade cautious. I sit out below the green, but I actually probably right here should have longed. I just was too busy doing the contest. The correct long should have been for the 30-point run from there to there. That would have been the correct trade. Yeah, I should have longed. I should longed yesterday's close, but whatever. I'll take the 300 bucks. I'll take it. Let's go. Keep going. Keep going. It's 15 points a run from here. 14 points a run. Better than a sharp stick in the eye. Okay, let's go. Why not? Res greater than 0, gap fill. We reclaimed hedge pressure. I should have bought on the bounce, but I jumped in here because I'm late from here to here. We're good. If it falls and breaks from here, if we get to here and res is greater than 0, I'll take this big long. That's the one I should have taken if I wasn't busy yelling at the screen for the contest. That is the correct trade to have made. With a medium-sized position, actually, confidence is really high. High-ish. DD is great. Resilience is great. We are now in bull long up, which is open, blue open. This isn't updated, but this is bull long up. This is bull long up. This is the open, blue open trade. 1 ABLU. You guys know this one. My dumb ass should just long right there, but whatever. You not paying attention during the giveaway. Anyways, because the event is active, I'm trading a little cautiously. So it's normally a small trade that I would trade even smaller. The event being active has me a little cautious. I should be trading like with 1, but you know, I'm feeling a little joyful today. So let's do 2. Yeah, but with a small position, you guys are so good at this. Y'all get it. Y'all get it. I love when y'all are telling me what to do. We're gonna fill the gap and then call it a day. So everyone should win today. I mean, look, I just aped into this shit right here. Whatever. Let's go. YOLO to gap fill. This is such a. I mean, it's not a bad. The only reason I hit it because it's 15 points. It's a pretty sizable move. It's a good sized move. You guys know the BLU1A. It's a really strong move. Oh, man, I should have taken... I would have liked and got the full 30, but whatevs. All these, like I say, contests sometimes make it harder for me to pay attention when I need to be paying attention. About 4 more points to go. Right about 59.68. We're going to close it out. Give or take. Remember, I'm looking at futures. Let's go. $700. Let's go. Keep going. Keep going. Clear that event. Clear that event. Let's go. Let's go. Come on. Come on, baby. Again, event's still active. I'm going to be a wuss. Next string candle. I'm going to close out 1. Let the rest ride. Okay. Close out 1, let the rest ride. Lock in some of that profit. Event's still active. I should have only traded 1 to begin with. I popped 2. Let's hold the 1. Let it go. Close at the open. Residiti pumping, baby. Let's go. This scared me out of being on the long trade with that big exhaustion spike. We're going to look at the scanner really quick, find out which stock that is. Let's look for half gap break ups. We'll look at that condition right here and see, is that Apple? Who is moving my market today? Which one of you is doing it? Who just broke? AT&T. Pepsi. Ah, big Nasdaq stock. Nope, that's not the one. That's not the one that broke. Oh, not half gap breakup. Sorry. Above half gap. I did the wrong one. All right. Peloton. Let's see some big ones. Where's the big ones? Oh, let me grab this. Come on. Oh, this mouse over it. It's not a Nasdaq stock. It's an S&P only stock. Because it's above half gap. So we're looking at above half gap. It's not a Nasdaq one, even though it popped. Still above. No, actually, it's in... No, I'm sorry. It is in both of them. But it's back below. So it appeared on the list and got rid on the list. Let's just take a guess. Because I missed looking at it. Let's go through the big techs. It was Apple. My hunch was that it was Apple. It was Apple. And Microsoft. Yep, you guys nailed it. Remember, I closed out profit on that one. Just to lock it in. We're back at half cap. Ooh, hold on. Come on, SPY. I'd love to hit it again right here. I don't like that it did that. Watching res. Res still greater than 0. We're good. What's Nasdaq doing? MHP. Oh. You got a pivot on MHP on Nasdaq. MHP resilience less than 0. Not so hot. Right here. Event is still active. I still need to trade small. Give me some red here, baby. Give me some red. I'm very confident that we eventually end up here. I'm not confident that we end up there from here. Nasdaq res less than 0, so it's going to have a hard time fighting, and Nasdaq MHP is here. We're right on the edge of a possible MHP break. MHP break and recovery, we trade with caution, right? It's yellow light. So yellow light means small position. This is a great trade for the upside, though. I don't hate the idea of doing that, but one contract only. The better trader here is Nasdaq from here to here. Let's see if this orange light goes above 0 will be good. Finish off that BLU setup right there. BSU pressure, orange to blue. It's trying to push through here. So we'll see. There's an impact line probably in here. $100.55. $75% blue hedge pressure. That's the new number. 70% orange hedge pressure. We close by the end of the day. Same spot. A second entry here. The IRL likely is set up. Again, we're still caution for the event. I like to buy IRLs to support back to here. This is a trade option too. So I'm one long, a second long there. I mean, there's long setups now. Is this a new hedge pressure? Yeah, it's the second day of new hedge pressure, by the way. Right. How are we doing? Is resilience getting worse? It's still okay. Nasdaq is not as great though. Nasdaq resilience is less than 0, so this is actually fighting at half gap and it's gonna have a hard time going higher. We need to see this move up. This one right here needs to go higher. So Nasdaq is like basically not giving us the power we need to be ultra bullish on this market. But we'll see. Problem with this is that Nasdaq is going to have a hard time breaking through the half gap. That's why I'm nervous here. The resilience is still negative, so it's resisting right here where my mouse is. Yep, they both replied. Both the winners, all the winners replied. They both did. They both just did, yeah, within the time limit. All right, guys, help me make a decision. All right. Mortgage rates. Do you think mortgage rates are going to go up or down over the next 4 years? 3 to 4 years. Neil thinks they're going to go up, down. Okay. So of all time, let's go to all time, right? Mortgage rates have historically been very high until the bull market of the 2000s when we finally started dropping sub 5. Okay. Mortgage rates got incredibly low leading up to the financial crisis. We're extremely low through COVID, and now we've returned to like a state of historic average normalcy. Currently right about 7%. Okay. So the question is, let me tell you what I've noticed, and I need to make a decision because I'm trying to lock in rates. Do we think the mortgage rates are going to keep going this way or that way? Okay. Now, let's make an assessment here really quick. Let's go ahead and mark mortgage rates. What is it? Z, not ZC. ZN is the 10-year. No, that's a few. What is the 30-year treasury bond? I always forget. ZT? It's the 2-year. ZN is the 10. DH, CT, Y. I'm gonna try all of them until I find it. DQ is the fund futures. DB. There it goes. There it is. All right. So 30-year and 10-year are both incredibly useful at understanding yields, right? Because that factors in, and risk is what factors into mortgage rates. Okay. Let's do a daily chart. All right. Let me show you something cool. So, do we notice a pattern right around April, May, around, hold on, wait. Actually, let's go back to March, 2 Marches ago. I'm learning this as I go. Okay, so some of these mortgage lenders are like, we look at the treasury bonds. Somebody uses the 10-year to look at it. Notice how the 30-year is not necessarily giving us much information. There seems to be no correlation between the yields. Remember, inverse of premium directly relates to the yields. Yields have been going up since September. And so mortgage rates have been going up since September as well. Zoom in. Can't zoom any further than that. Rates have been coming down since November of last year. And in general, yields have been going down. And it pivoted right around September. And it pivoted right around September. The pivots are similar as far as the trending goes. So the idea is that, let's look at the ZN, because the ZN I hear is stronger for margin rate, for mortgage rates. But again, the pivoting is roughly the same. If premiums go down, yields go up. When yields go up, mortgage rates go up. So from September until now, remember, this goes down, mortgage goes up. Do we think this is going to continue to go down? Or do we think this is going to pivot? If this pivots and goes higher, like May till September, we might be able to save a point of interest, which on our house, it's pretty significant, right? That could be like, I don't know, $500 a month on the payment. So, right, we can refinance. So let me tell you the strategy that I'm employing. Do we think they give me 3 weeks, and this is what they're saying, you have 3 weeks to lock it in. Do you lock in now, or do you gamble that it can go higher or lower? So let's look at what it does over the last 3 weeks. Let's make an educated decision, right? So from October, November 14th, 7th, and 31. So this data point, this, and this, that is a 2-week period. So let's go back 3 weeks, 6.5 to 6.7. That's a quarter of a point, and that's fairly significant when it comes to your payment, because that could be on a $1 million house, roughly $300 a month, right? Pretty significant. Maybe more. So the question is, if the pivots and treasury notes are correlating with pivots and mortgage rates, can we forecast 3 weeks out using monthly maps so I can make a decision on buying a house? Do I lock in the rate now, or do I gamble that we get a better rate in 3 weeks when we close? What is the 20-year? It's Z. What is the 20-year futures? I always forget the Z. C is corn. D, no. E. F. I'm just going to go through all of them. ZF is the 5. Is it TY? It's doing all over the place. Okay. L. M. This is the idiot's way of doing it. ZN is the 10. I know that. Right. The market does set the rate. Did I skip one? Good lord. I'm gonna Google this. Is there 20-year Treasury futures? What is it? There is. What's the letter? EZ4? What? That's not right. Globex code is TWEZ4. No, that's not the ticker. What the heck? ZB? Is it ZB? Was I not paying attention? It's a 30-year. Is there... It's not Z something. Yield futures. Let's go here. Let's look it up. Oh. Those are yield futures. I don't want yield futures. I want... year. Let's just look it up. What do we got here? Question is, can I get a quarter of a point over the next week? Let's just look this up. Yield futures is CME. Isn't it CME? This is just interest rates. Yeah, this isn't going to be yields. There's yield products. Where are they? I don't look at these things pretty much ever. Oh, we can do all products. Okay. Oh, it's okay. It's C-bot. Okay. Near swap futures. TWE. Ah, there it is. Okay. All right. I guess we don't get the ticker in Thinkorswim. Well, it's TWE, but Thinkorswim doesn't pull it up. Okay. So next step, let's look at Treasury bond ETFs. The TLT is the 20-year. That I know. Do we have a 10-year Treasury bond ETF or a 30-year Treasury bond ETF? LT's 20. You guys know the tickers to that? TLT is 20. 30-year. Treasury ETFs, Direxion might have some. Okay. UTHY. Let's see what Direction has. 7 to 10-year T-Bull, 7 to 10-year. Okay, so we need a 10-year TYD, TYO. So I'm gonna sample some. Yeah, so what I'm trying to do, watch, I'm trying to run monthly maps. Watch this. So what I'm gonna do really quick is I'm gonna run the maps on some of these things, and let's see what's going on the next 3 weeks. Let me use a monthly map to buy a house. Oh boy, that's a little crunched up. Not a lot of good data. Unfortunately, that's not any good. Okay. What about the TYD? Not a lot. There's not a lot of liquidity in these things. TYO. Bull side is liquidating. That's one thing to take note of. The bull side is liquidating. We're in an illiquidity pocket. Then this is more likely to go down, which means yields are likely to go up and rates are likely to go up. Throw me some more tickers. I need to run some monthly maps. Give me all the treasury ETFs you can find. We're gonna try to run some monthly maps on them. UTHY. Let's see if I can get better data looking around the room. You guys know any treasury ETFs? Case in point number 2, we're below monthly hedge pressure on the TLT, which means premiums are continuing to drop, which means yields are going up, and it's correlating with mortgage rates, which means mortgage rates are likely to go up. And what's funny is that I was looking at every Fed meeting, even though the Fed has cut rates, mortgage rates went up after every Fed meeting because people overcompensated for that expected move, and it was pre-priced in. And that's what I think is going to happen in 3 weeks of the next Fed meeting. They're going to cut a quarter of a point, which is almost guaranteed at this point. And I believe that'll cause interest rates to pop. I'm trying to make a decision to lock in now. XPO. So basically, I'm going to save myself a quarter of a point. Nothing there. SGov and Bill? Where are these? Oh my god. You broke Rocket Scooter. What is this? What the hell am I looking at? Where are these things, Neil? 3 months? Oh, but why does it trade like this? That's so weird. There's just no liquidity on these things, I guess. Oh, these are the T-bills. Oh, these are the T-bills. Okay, that would make a lot of sense. Okay. I thought these were ETFs. Yeah. I mean, sorry, liquid. I didn't say illiquid. Liquid. Highly liquid. Yeah. They're stable. T-bills are very stable. IEF. Okay, thanks, Garrett. from there. Govs. Might use monthly maps to buy a house, guys. Zeros. Okay. You need enough liquid options trading to trigger liquidity maps data integrity check. It's not triggering anything. Either it doesn't have options or doesn't have anything. So no data is found for these. The best we can hope for is the TLT, which is liquid enough to trigger a monthly map. So let's do greater market analysis and decide our interest rate's going to go up, mortgage rate's going to go up in the next 3 weeks. Okay, ready? Let's make some assumptions. Mortgage. Look at the APR mortgage rates right now. Okay. Let's look at the greater market. So they're basically calling me and they said, Matt, you can lock it in now. You got 3 weeks to take a gamble if it's going to change. What are you going to do? Well, okay. So the first thing that I do is I look at, well, what's the average variance in a 3-week rolling period? Like, I'm an engineer, right? Looking at data and analyzing data is what I'm born to do, baby. Born to do it. So I look at 3-week rolling averages and I say, well, over the last, in this particular environment, on a 3-week period, some of the biggest runs in a 3-week period were here and here. Let's find the best case and worst case scenario, right? A 3-week period from here, 1, 2, 3, 4, 7.2 to 6.7. That's half a point in a 3-week period. Here. That's 0.4 points in a 3-week period. 1, 2, 3, 4. This 1, 2, 3, 4. 6.5 to 6.2. So 0.4, about half a point of variance in a 3-week period in the worst, best case scenario. Then I calculate all right, mortgage calculator, okay? House is $1 million, $6,500 payment versus 0.4 points. Or let's do half a point just to be conservative. 6.33. So the difference, 6.57, 6.2. The difference of about $357 a month. How much money is this worth to me? Times 360, right? That is about $128,520 decision. Granted, I hold this house for 30 years without refinancing. Granted, when you refinance, none of this matters, right? But with all things being said, that's a pretty substantial decision. 3 weeks of variance is this much back-end interest payment over a 30-year amortization, right? So let's look at this. Or amortize, right? So look at this. Not a unsubstantial information, okay? So that's about the payment difference. On $128,000 on $1 million house is roughly 10% of the value of the house itself, which practically is the equity I'm assuming to gain over the course of the time I'll be living there anyways, right? So there's a break-even point where this additional payment I'm not getting taken off eats into the equity I think I'm going to gain per year, right? So let's think that this just make a decision. Okay, this is substantial. It's possible for 3 weeks to make a big enough difference to matter. 6-figure difference, right? Now, again, when I refinance, it's the difference of the two differences, but negating refinance, we decided today this is an important decision. Okay. These mortgage lenders are like, you need to decide now. Are you going to lock in or wait 3 weeks? I'm like, what's the urgency? I know nothing about mortgage rates, and I've educated myself in the last 2 days to make this assessment. Now I understand the importance. That's a pretty substantial decision. I get it. Okay. So let's find out. Can we predict mortgage rates? Well, do they correlate with any other thing? I don't know if there's a mortgage rate instrument to trade. Like, do they correlate to something that we already look at? Right? Treasury notes. Right? Wall Street tends to invest pretty heavily into fixed income. When the stock market's likely to come down, they roll into safer plays. Right? When the market's a little less reluctant, or a little more reluctant to invest in the stock market, money goes to cash in a very nasty bear market. Money tends to go to the sidelines into fixed income during periods of like uncertainty, right? So they've created ETFs that track these treasury futures, that track, the yields for these bond auctions they have. So the futures are trying to predict the value of the auction. And as we know with yields, is that when premium goes down, the cost of this thing goes down. It means the demand for this thing is down. Therefore, they raise the yields to bring people back to them. So yields go up when premium goes down. If the premium is going down, it means the demand is going down. So why would the demand for fixed income be going down? It's likely because the demand for either cash or stocks are going up. With the SPX going to all-time highs, it's safe to assume that the desire for fixed income instruments will be less because everyone's in the stock frenzy right now. So yields historically in treasuries have been going up because nobody wants to buy them right now. We're in a strong bull market. Okay. So let's take this chart and say, okay, strong bull market. People are raising yields for the fixed income return. Does that correlate with mortgage rates? Again, I don't fully understand the correlation because I'm not that smart at these things. I don't know any of the factors that go into mortgage rates because I'm not an underwriter and I don't do this for a living. But I am an engineer and I'm going to do my best. So let's look at the correlation. Again, I'm just going to repeat what I did earlier and ask myself, do they correlate? As a matter of fact, let's go to the MRCI table. Let's just see if the treasury futures somewhat correlate on any period of time. I'm making a short-term decision. So let's look at the short term. Let's look at all the Z's on here. Are they here? Please tell me the Z's are here. You don't have index? You don't have treasury futures here? Come on. Yeah, I'm going to discuss the buy down option in just a second. Hold on. Oh, 30-year T-bonds. Okay. Hold on. US Z24. Oh, they call it US. Okay. Any more on this table? MRCI correlation table. Very awesome. When people say oil goes up, S&P goes down, gold goes up, market goes down. Listen, come to this table. MRCI.com correlating table tells you on pick your time frame, 180 days. Over the last 180 days, when the Dow Jones was green, ES was green 92% of those times. They correlate. This is green and that's green. Check for correlate. This is green and that's red. Check for not correlate. 100 means they correlate every single time. Green, 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 green. Negative 100 means they correlate this way. Red, 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 red. 0 means they correlate like basically this. That's the way I understand it. No correlation. That's the way I see it. Hold on. I think that's right. Let me read this. Help. Okay, the price is a number greater than -1, less than 1. That's every day over the sample period. Each of the two markets duplicate the other's higher or lower closing. You have a coefficient correlation equal to 1 to 1 or 1. Conversely, if the two markets always close contrarily to each other, the coefficient is -1. Okay. Oh, so I had it backwards. Okay. So what I said was not correct. Actually, the way these correlate is that negative is an inverse correlation that's really strong. So if one goes up and one always goes down, it's -100. If they both correlate, it's +100. So 0 means it's going to be random, no correlation. So closer to 0 is a strong non-correlation. So correlate. Okay, so let's see if they correlate. This, or this, it's 100. If they correlate opposite, it's -100. You got it? If it's no correlation, it's 0. All right, so let's keep going. This is what they teach us in engineering school to figure this stuff out. All right, so do we have anything here that's treasury related, and does it correlate to S&P? On a 30-day, it's close to 0. Well, in the short term, it doesn't really correlate. Well, that doesn't help. What about 60 days out? It's roughly an inverse correlation. 90 days out, it's closer to inverse correlation. 120 days, practically no correlation. 180 days. Stronger correlating. So what this tells me is there's not really a correlation on any good time frame. It's a little random. It does make sense that it would be kind of random because people that leave the stock market are either going to go to cash or go to treasuries. And those strategies will vary based on different market conditions. Nothing's really changed over the last 180 days except for Fed's cutting rates and the market's been practically stable. All the data. So I don't see much of a correlation between treasury bonds and the stock market, unfortunately. On a shorter term, it's inverse. On a 2-month term, it's even stronger inverse. On a 3-month term, it's a weaker inverse. On a 120-day, it's a less weak inverse. So it's inversely correlated, but the strength is different. On 180 days, it actually correlates together. So it's weakly inversely correlated is my now assumption here over the longer term. Now I need to make a decision in the next 30 days. On the next 30 days, it's medium inverse correlation. So let's go ahead and just focus on that. Stock market goes up, treasury should be going down. All right. Stock market going up, check. TLT, treasuries going down over the last 30 days, and check. All right, we're good. These are the last 30 days. Going down, check. SPX. Last 30 days, SPX going up. All right. Check. Okay, so we do have something to take a look at. If SPX goes up, treasuries down. Okay, cool. Now, do treasuries correlate with mortgage rates? Let's just kind of start drawing some conclusions. So that's a weak inverse correlation, but it's there. From October 3rd until November 14th, rates have gone up. Okay. Rates gone up in that period. And October 3rd to November 14th, the stock market has gone up. Okay, that's interesting. Do those things correlate? Let's figure it out. As our previous conclusion, as those are inversely correlated, therefore treasuries will be also down over that period of time. And treasury down over a period of time. So rates go up when treasury premiums go down, which, as we know, premiums are inversely correlated to yields. Okay, so let's just write it as yields. Treasury yields go up. Rates go up, which is what I care about. And SPX is going up when the rates have gone up. So let's look at a bigger timetable just to kind of estimate this on a wider scale. The time that rates have been high in general goes from December of 2021 until now. As we know, we've had periods of high inflation during that time. Let's see if I'm realized. December of 2021. Until now, inflation has been high, right? So high inflation has certainly kind of like created a situation where mortgages were kind of like mortgage rates are going up. High inflation made it harder for people to live their lives. Risk was high, and rates go up when risk is high. That does make a whole lot of sense. Okay. So as inflation started coming down, right about July of 2022, one would assume that mortgage rates stopped getting much worse. Okay. Here. And in July of 2022 it was roughly 6%, and right now it's roughly 6 and some change. All right, sorry, it's 5.6 to 6.6. So right, mortgage rates stopped going extremely high once the CPI started coming down, CPI. Mortgage rates like basically capped off. So it's becoming easier for people to buy a house. Unemployment probably factors into this as well. Just kind of looking at economic data. I would say that'd be probably the most sensitive factor when determining the risk of loaning money is the mortgage rate. I'm sorry, the unemployment rate. And let's see if we can make a judgment call there. And then I'm going to do a monthly map on TLT and make a decision. Excluding COVID, over time, in strong bull markets, unemployment was traditionally going down. Right now, unemployment's been going up since COVID. Since about beginning of 2023, the unemployment rate has gone up. Okay? It's not good. And since 2023, while CPI had a topping effect, it's not a reversal effect because unemployment is going up, which is keeping this high. The risk is high. Do we see that so far? So like I've never looked at mortgage rates until now, until live on this stream. I'm doing this live with no prep work. I feel like the unemployment rate going up is likely preventing interest rates from coming down, mortgage rates from coming down. The CPI flattening is making it easier to buy a house, but the unemployment rate being high makes it harder for people to pay back their loans. Ugh. So of those two, I would expect the unemployment rate to win the fight. That is direct risk. Unemployment goes up, mortgage rates are going to go crazy. Let's see if I was right. Let's see what happened during COVID. Well, COVID was a different story because they also can raise rates to incentivize or lower rates to incentivize people to buy houses when demand is really low. Oh, so housing demand, that's also part of this. Housing starts. That's probably even stronger correlation. That's directly what people want to buy. Well, let's just kind of learn interest rates really quick. The demand has been coming down since mid-2022. Since start of 22. Demand has been coming down since 2022. Construction demand. And since... there it is. Okay. So there's not as many people buying houses. Or okay, that's building houses, number one. New home sales or housing sales. To new home and existing home sales. Are people rushing to get in and out of houses right now? What's making that rate go up? New home sales have been going down since COVID. Right? People were selling their houses when houses were at peak, like the end of 2020. They were making a profit. And so new home sales are still on the rise, which is good since the last crash, but it's kind of like in the range of normalcy as we've seen other bull markets. It's not as high as it's been in the early 2000s, but adjusting to like everything else, it's pretty consistent. New home sales are higher than they were in the first Trump bull market. So the demand is there for new home sales. Okay. And since what? COVID? Since January 2023, the demand has been going up. Okay. It's also because inflation's been coming down. So people are now able to stretch their dollar a little further. You'd expect them, since the pivoting of the CPI, to have more desire to buy bigger things because it's easier to buy it. Okay, that does make sense. CPI down, new home sales up. Existing home sales will show it's a buyer-seller market, people getting out of the houses that they have. And that's been relatively flat. It went up at the peak of COVID as people were selling their houses for the premium dollar and that peak demand. And we're back down to normal. So it doesn't look like the unemployment rate being high is forcing people out of their houses since 2023. People aren't having a hard time paying their mortgage. As a matter of fact, existing home sales is lower than it is, which means people are holding on even through higher inflation. So I don't think it's a risky environment. It's just that people aren't buying new houses as much, and people with existing houses are kind of holding in there. So the lack of existing home sales, though, does show a lack of demand in the housing market. And new home sales are slightly better. Existing home sales, not that much better. So it doesn't look like there's a surge of people wanting to buy houses as quickly as they used to. And that's likely because the unemployment rate is going up. Despite the idea that inflation is coming down, the risk seems to be based strictly on the unemployment rate from just making this assessment right now. Now I'm still in a trade, I know. So my thought is that the last piece of this puzzle is, do the rates themselves directly impact people's decision to buy? With high inflation or higher inflation, it's harder to buy a house. If the rate's even higher, it's even harder to buy a house. So if the rates being higher is what's nuking the desire of people to buy houses, which is likely the case, then why is the rate going up? And it leaves us only through the degrees of freedom is that the reason the rate is going up is because the unemployment rate is going up. Banks are pricing that mortgage rate higher, or the more lenders are pricing that rate higher. The national rate is going higher because the probability of people paying back those loans is going down because unemployment's going up. So now I've made the assessment that the mortgage rate is the most sensitive, the unemployment rate, and that's exactly what we need to look at. What is the mortgage rate most sensitive to? Again, I've never Googled this, so let's find out together. Five major factors. Supply and demand. Inflation influences how... Okay, we talked about CPI. Consumers are likely to borrow more during periods of economic growth, which often leads to higher interest rates. Aha, there's that SPX up. Mortgage rates up. There it was, right here. Okay. The Fed doesn't set them. Mortgage rates are impacted by the Fed funds rate. Okay. We talked about it a little bit. Bond market conditions have an indirect effect on how much lenders charge for mortgages. Okay. Treasury yields up. Rates go up. All right. We covered that. All right. Drop in demand for housing inventory often leads to a drop in mortgage rates. So an increased demand for housing should be an increase in mortgage rates. And then we said anything about the employment rate, unemployment? New home sales increase. Therefore, mortgage rates are increasing. Okay. Wait. Where's that thing at? It's here. Oh, well, unemployment factors into the GDP. Okay. Unemployment and wages decline, leading into decreasing demand for home loans, which puts downward pressure on interest rates offered by mortgage lenders. But it doesn't say anything about unemployment raising the risk of people not paying their bills back. That's the obvious thing. Why is that mentioned here? Let me see. How much? Investopedia didn't have it. High unemployment typically leads to lower mortgage rates because it signals a weakening economy. That does make sense. So it's not anything to do with their willingness to pay back the loan. It has to do with what's utilized to stimulate growth, and it's an indirect. Okay, it's not as strong as I thought it was. Okay. So higher unemployment should lower rates. Okay. Look at the short term on that. Higher unemployment, lower rates. Lower unemployment, higher rates. All right. Since August until now, rates should have been going up. And that's what's been happening. Okay. All right. So now what data is coming out that makes a lot of sense. Now we do know that the correlations are here. That's pretty good. So yields go up. Mortgage rates go up. SPX goes up. All right. What's the probability of all those things happening? We're talking about the SPX. We did the monthly map on this. Greater market. Oh, my trade. Let's fill the gap, baby. I'm still there. Greater market. DD bullish. SPY. Check. SPY greater than MHP. Check. SPY monthly map, which we already looked at. Over the next 3 weeks, bull side strengthening, bear side weakening over the next 3 weeks. While there's a topping pattern, the market is still strongly bullish. Okay. Market strongly bullish. All right. What about Treasury? TLT. We can do a monthly map on that as well. The only thing we have with that is a monthly map in hedge pressure. Like DD is just for SPY, but TLT in general. Over the next 1 week and 2 weeks, you have bull side liquidating, bear side relatively flat. So treasuries are expected to go down. So TLT monthly map is bearish on premiums, which is bullish on yields, which consequently is bullish on mortgage rates. Okay. All right. What about daily chart? Below MHP as well. Also bearish, which means up yields, which means up mortgage rates. Okay. Wow, they are likely to go up based on just the data alone and the correlations. A couple more things. Unemployment's been ticking down. Fundamentals. Remember, unemployment down. Rates up. Okay. Dang it. I need lock. Starting to look like I need to lock it in today. Oh my goodness. All right. Let's keep going. Let's look at all the things that correlate. 30-day window. Yep. S&P goes up. Treasuries go down, which means treasury yields go up, which means rates go up. S&P up, rates up. Damn it, S&P up, rate up. Housing demand. Lowering. Housing starts. Okay, this is construction. New construction. Lowering. New home sales. Okay. Rising. That chart go. Drop in demand of housing inventory leads to a drop in rates. Is demand for housing inventory going up? It is relatively flat-ish, but over time, over the last year, 3.8 to 4, down to 3.8, back to 4. It's been relatively flat and cycling, so not much going on. Since 2022, the demand is kind of lowered, but since 2023, it's been stable. So no change in new home sales. Existing home sales. New home sales are on the rise. So demand is up. Mortgage rates up. Oh, I need to close the trade, don't I? Yep, let's close it out. Build the gap, close it out. Hold on. Hey, babe. I'm live on stream. Guess what? Rates are going up. Lock it in today. Merge it. Yo, what's up? We're live on stream. We did the math. What up, dude? We did the math live on stream today. Lock it in, dude. Lock it in today. I gotta go. I love you guys. Lock it on in, baby. All right. Send it. Send it. Lock it in. All right. Let's talk about... I wanted to have my Gordon Gekko moment. Lock it in. Lock it in. That is so funny. All right. Lock it in. Let's go. Why not? I don't think I'm... All right, let me just post this in here. All right, let's see if I... Like I'm saying, this is a $200 or less a month decision. $200 to $300 a month. This bet's either going to cost me $200, $300 or save me $200 or $300. Lock it in. Hold on. Hey, what's up? Yo, Trey, sorry, what's up? Okay, so wait, buying down points, permanent buy down points on the 30, or this is temp? Yeah, no temp. What's the change on the principal and interest payment between the two? Hey, Trey, by the way, if you watch my stream from today on YouTube, I did a lot of math correlating these interest rates, dude. You'd love it. I'll send it to you. Yeah, yeah, yeah. We can do the difference in the payment. If it's only 21,000 for that rate drop. $21,000. Okay. For your rate. Okay, so if I do that and then we refinance, how's the refinance affect that? It's not a temporary buy down, but a refinance will make that money not. Okay. Yeah. Mm-hmm. But it's seller's credit anyway, so we gotta spend it. Yeah, let's do it. Yeah, let's do if it's 4 or less. Yeah, let's go with it. Okay. Yep. That's it. You nailed it. Let's do it. All right, brother. Thank you, man. All right. I'll text you later. Okay. Okay, bye. All right, guys. I just bought a house. We're under contract, and then that's it. That's the paper. That's it. All right. Got a puppy yesterday in the house today. All right. So it looks like mortgage rates are going up. I need to lock it in. Yeah, so I'm going to do a buy down. I thought they would be coming down. I don't think they are. So here's the thing, right? If you believe interest rates are going to come down, don't ever do a temp buy down. So a temp buy down is basically where they tell you, okay, because a lot of times when you sell your house, right? A seller will give you some credit and you're going to spend it on something, usually closing costs. And then the rest of it, you can buy down points of the interest rate. But it's 1 for 1. Like the dollar doesn't create additional value. An example is if I spent $30,000 to buy down temporarily, I will just pay off $30,000 worth of interest ahead of time to make my payments lower. Why would you do that? You say, why would you take that money and spend it on that just to not get anything out of it? Because the seller's credit, it's money you have to spend or it goes away. It's like the surplus episode of The Office. You got to spend it or else you don't get it, right? So you got to figure out something to do with the money they give you. 30, 50, 80, I don't know, whatever your seller's credit is. You're going to get something. It's prepaid interest, as Brian has said. Or you can use it for upgrades on the house. You can use it for closing costs. You can use it for something. Appliances, whatever case. Use it or lose it. That's it. The temp buy down option is for you just to throw it into your interest up front, basically. If you get the option to do temp buy down, it's usually only allowed to be done. Well, Well, these buy downs are usually allowed to be done with the seller's credit. Like you can't fund it with your own money. Some of them, like the point buy down. Because the straight up point buy down gives you money over time. It's called a break even, as Brian has said. As if you have a payment and they say, if you give us, 20 something thousand bucks, I don't know, whatever I said. Why I say one, $20,000. We'll lower your payment by X interest and you'll save, I'm just making up random numbers, $500 a month. Okay. Perfect. So in 40 months, in this just example, I break even. And therefore, in 360 months of a 30-year mortgage, I'm basically not paying $500 a month to the interest for months 41 through 360. In this example, 320 times 50 is $160,000 worth of interest you didn't pay at the tail end of that house, assuming you hold it for 30 years with no refi. Okay. That's a big decision. To buy down interest points forever right now. Why not put every dollar you have into doing that? Well, they don't let you do that. Typically, they don't let you use the seller's credit to do that. You're basically paying them up front against the risk they take of you not paying them down the road, or you refinancing with someone else and them getting the interest points. You paying them up front, it's just giving them an advance on the money you'd otherwise pay them. And they're betting on you selling the house within the time frame of your break-even point anyways, to not really benefit from that arrangement. If you're a person that's going to buy a house and sit there for 30 years or past your break-even point, 4 or 5 years, Brian says 5. Ours is like 4 or whatever. 4 or 5. Whatever he said 4. I was estimating 4. Chances are you're not going to be there that long unless you're planting down. If you're there that long, buy down as many points as you can get away with. But if you're going to sell your house in 2 or 3 years, or refinance within 2 or 3 years, you're going to lose it as well. You paid money to lower the interest rate. If you refinance because the interest rate comes down, then it came down anyways, and you didn't have to pay up front to get that. So the question you have of yourself is, what's the probability the rates are going to come down? If the answer is very high, then don't buy anything down unless you have to waste money somewhere, buy your upgrades of your house, buy your appliances, whatever, and then throw the rest into points. Because you're going to lose it. Brian locked in at 2.8. He's basically golden right now. So the question is, if you think rates are going to go up, then buy down now to keep it low now with all of your money and fund your appliances and your upgrades out of pocket. The question is, do we think rates are going to go up? And the answer I came up with is yes. So as I was on the phone, he goes, I'm giving you this, this, and this to buy. And I said, lock it in and buy it all. Buy as many points as you can. Does it make sense there? Am I making it? All you home buyers out there, I'm just doing this right now. Have y'all, am I making the right decision? Right? You can't just commute the loan with existing terms to the loan on your home. Yeah. So if I think rates are going up, I need to buy down as much as I can and lock that shit in now. Right? This is my first time exploring it to this degree. You guys got to watch me learn live on stream while in a trade, by the way, while talking to my lender on the phone, who's saying, you either lock it in now or you lock it in 3 weeks. Did I make the right decision by locking it in and telling him to put 100% of the seller's credit into buying down points permanently? If I think rates are going up, to qualify that that's probably the case. The S&P is going to continue to rally. Yes. It may stall for the next 3 months, but it's likely to rally, which means rates may stall for the next couple months either, which means 3 weeks is not going to make that big of a difference, but it's more likely to go up and down. Unemployment's likely to come down further, which means rates are going to go up. The demand is up, which means rates are going up as well. Past the 9K ETF, 1-day eval. Bro, let's go. All right. So, did I make a smart decision? Texting IDOC. We got to buy like 30, 40 grand worth of upgrades and appliances. We're going to pay that out of pocket. They're all, instead of the seller's credit going into the appliances and whatever. Because if we think the rates were going to go down, then we just let them come down. I get a lower payment down the road anyways. So the refi, I might as well not pay out of pocket for my appliances. So the idea is if rates are going to come down, just have a higher payment and then naturally get a lower payment without having to pay for it. Instead, buy your appliances. You don't have to pay the money up front for that. If I think rates are going to go up, then use every dollar I can to buy the rates down and pay out of pocket for appliances. Because the buying the rates down is going to save me $400 or $500 a month past my 4-year break even. There you go. So this is kind of like what I teach you to do in trading. I know absolute jack about interest rates. I just discovered on my own while we're sitting here. By exploring. And people always ask me like, Matt, who taught you how to do all this stuff in the market? Nobody taught me anything. Fundamentals, making relationships. All you did was see the process of how I do it. I pull up a bunch of data and I start tying things together. Then I make a judgment call. Very simple. Just write it all down. How do they correlate? Line them all up. Wow, they all seem to point up. Okay. All right. So like, I'm kind of cheating because in engineering school, they taught us how to do this, right? It's called root cause analysis. You can back into the why of any problem through this process. I just taught myself how to time buying a house. I speculated that we needed to get in now before things got more expensive and rates went up. I did that earlier, which is why IDOC and I were like, we kind of need to lock in a house now, right? I never dove into it as deep as I did. I was convinced that rates were still going to go up through what other people had told me. My realtor, some of the lenders we talked to, they think rates are going to go up. And I was like on the phone with them, like, what makes you think that? And they didn't really have, except for the guy I talked to now, Trey, he's really smart. The other ones didn't really have a grasp of like the correlation and why. They just knew the numbers. They go, well, our analysts say the rates are going to go up. And I, you know me, I don't listen to what other people, I'm like, well, can you tell me the top 3 or 4 correlating factors? And the other people I spoke with didn't really know specifically. They just said, well, it correlates with Fed rate and unemployment and demand. But they didn't really tell me like as detailed as we just explored. So it was like, okay, let me explore it further. And IDOC was asking me yesterday, hey, we need to make a decision to lock in. I go, you know, it'll be fun for me to do it live on stream. So she was calling me to remind me, hey, did you calculate this yet? I'm like, oh, let's figure it out. So it's good to kind of like come up to that conclusion. Yeah, and I was thinking, are they just telling me rates are going to go up? Please lock it in to get me into the mortgage. That's what my thought too was like, was it a sales pitch? Am I biting on the apple? They just want to rush it and get me to sign the paper. Crusader Chair said, new to the channel, didn't know you're an engineer. What's your engineering discipline? So you can unfairly judge me? This is a degree right there. My degree was in chemical engineering. So we're kind of like the cooler, I think, of the engineers. At my school, the civvies were party animals. They were your drunken, loud party guys, the fun ones. The computer engineers were the nerdiest of all of us. The mechanical engineers are probably the smartest of all of us. And the chemicals were like the most well-rounded. And the industrial were the most organized, like accountants. Like industrials are like your numbers people. They're your chess players. You can't get nothing by them. You can't lie to them. You can't sell them anything. They're pretty rigid. Brian's like, yeah, Brian gets it. Brian's in the industrial side. He's a facts and numbers kind of guy. Kimmies are like the fun ones. The more well-rounded. They can kind of speak everyone's language. They're in the middle. What about you, Crusader? What was your what's your background? We were I guess the civils were the most fun ones, the party ones, the people that you hung out with. And they made the party fun. Kimmies are kind of like middle of the road. Mechanical engineers haven't done anything since the internal combustion engine. That is true. What else have you guys made since then? Since the engine. So I actually subspecialized my degree right there, and I started my class, by the way, so I did pretty well in school. But I also was like, as an undergrad taking graduate class, I worked for the head of the department. So they had this like one position open up, and reaction engineering and catalysis was like my specialty. So, and as an undergrad, they snuck me into graduate classes. I was allowed to actually take them for my electives instead of your normal undergrad electives, because I was working for this Limelight job that came up. They offered one student this role, and they picked the student in the class with the highest grade, which is me. And they were like, would you like this job? And I was like, what is it? And he goes, well, it's catalysis, and we're doing a very big project for the EPA right now. We're designing this thing called a catalytic converter for the diesel engine. This was in early 2000s, by the way. This didn't exist. And he goes, it's a global project. Everybody's working on it. And he's like, our task is to work with Engelhard and come up with the catalyst recipe that goes inside this thing. Here's the process that somebody invented in Europe or whatever. We need an undergraduate, research assistant to come in and help us run all the tests. And I was like, does it pay? He's like, $10 an hour. And this is in the time when minimum wage is $5.15 an hour, mind you. And I was a broke, poor college student. And I was teaching classes at the university to make a little bit of money, a scholarship program. There's an undergrad where you got to teach these supplemental classes to the main class. So I taught fluid dynamics and material science already. And material science kind of opened the door for me to like be very interested in materials. So because I was already teaching that, because I got like the top grade in the professor's class, he taught transport, like, which was like heat and momentum transfer. You Meckies took that class, heat transfer. We have one called momentum transfer, which is basically like the movement, like diffusion of particles and stuff. Anyways, I took his class, got the highest grade. He's like, we're gonna give you this job. And I was like, does it pay? He goes, $10 an hour. I was like, sold. And he goes, and you're working for the government because it's state school, so it's tax free. I'm like, you already sold me on $10 an hour with taxes. Tax free, even better. So I made myself a little $10 an hour extra bonus already, and I took the job. And I loved it. I fell in love with the whole process. Working for the professor. And so while I was doing that, he was trying to muscle me into grad school. He was like, when you graduate, I want you to take over this project from my other grad and postdoc, and I want to give this project to you, my son. Here are the keys to the chocolate factory, kind of thing. And he's awesome, man. I love this professor. He was a bigwig in the industry. So it's like, to get you ahead, that way you're not bogged down in graduate school because I need you working for me. I'm going to go ahead and allow you to take graduate classes as an undergrad, to count them as your electives, to get them out of the way so that you can get your PhD faster. And I was like, all right. So I basically graduated with a lot of my graduate classes done as electives as an undergrad, which is kind of neat. So I got to take graduate classes in undergrad. You always have engineering, always gives you all those electives to take. I got to take my next level grad class, which was kind of cool. But ultimately, when I graduated, I didn't want to get a PhD anymore. Not that it wasn't a good path for me. I loved teaching, I loved researching, I loved doing that kind of stuff. But I kind of wanted to go out into the industry and start making some money. I was like, I kind of want to start my own business, but I don't know what I want to do. But let me just go get a job as an engineer. So I had a pretty rock solid offer. I ended up getting internships my junior and senior year as well, which the paycheck completely changed my mind. I was like, all right, grad school and be poor for another 4 years, or at the time, they're offering me like 50, 60 grand out of college. Now, at the time, again, doesn't sound like a lot now, but that's like getting offered 6 figures out of college now, like 20 years later. So imagine getting offered a 6-figure salary at 22. Like when I was 22, some of my, at the time, again, when minimum wage is $5.15, some of my engineering jobs are paying me $30 an hour. So immediately being thrust into having money was like, ooh, this is making me rethink my life. I just kind of want to get paid. That's it. Oh, I forgot to say electrical. Electricals were also the nerdier ones. Very smart. I went to small school. Electrical and computer were combined the first 2 years. Yeah, so computer, we called it ECE at our school. They were combined. Yep. Our school had we had an ECE program, electrical and computer engineering. They were together. They combined the two. So my complete desire, I did do a lot of work on that process. It was actually kind of cool. But my desire to make money was like overwhelming me, and I was like. And then I had a connection to somebody I knew who was an upperclassman. Right when I got out of school, got me an interview at the time the largest engineering company in the world. And they offered me a bang up offer. Like in reviews, and I was like, I had to tell my professor, I'm like, I don't know if I'm gonna go to grad school. I might just go get a job. And he's like, oh, that's great. I'm so sad. I'm so glad to hear it. You know, it's sad you're not gonna stick around, but you know, anytime you come back, man. Come back and work for me. It's okay. We were buddies. He was one of my best mentors in school. Very, very sharp guy. I learned so much from this guy. Doc Harold. Super, super, super smart. One of the smartest people I've ever run into in my life. So the rocket scooter is like an engineering nod, right? So basically, that's the story of my life. And actually, the funny part is I didn't even know if I wanted to be an engineer. I didn't do so hot in high school because I was one of those smart kids that didn't really apply myself. I did every extracurricular thing I could. I was like captain of every club, and I used to compete. I used to win all these competitions and stuff. But like my grades were like average because I just wasn't challenging myself. And my SAT score was really, really good. So I got offers to go to schools and offers to go to engineering programs with scholarships. Just because I'd apply to a school and the engineering department would contact me. Hey, have you considered chemical engineering? We'll pay for a lot of your school. And like I always say, I'm like, you're giving me money? Sold. I'm in. So that's kind of what shooed me in engineering to begin with. Plus, I was always a math guy, too. But I never in high school was like, I'm going to be an engineer. I had no idea what I wanted to do. I come from a working class family, so my parents were like, whatever you want to do, we'll support you. And I was like, shit, half of my high school career, I wanted to be a singer in a metal band. Like, I didn't know what I wanted to do. I had no clue. I just knew I had a knack for like solving problems, and you know, math was my strong suit. High school, I had no idea what I wanted to do. Yeah. Rocket scooter. Well, long time ago, kingdom far, far away. Did he same thing? Oh yeah. So what made all you engineers decide to go to engineering school? How'd you decide that? What was your edge that pushed you into that? All right. So by the way, we've retouched the anchor point. Bye event. Event is over. Close out my trade. I think I made about 1,000-ish bucks today. No. 656. That's how much I made today. A galaxy far, far away. There was a time we had our basic app that we came up with. As Day Trader Paradise was my original podcast name, my stream name. And it was a tongue-in-cheek parody to make fun of all the gurus who were like flashing Lambos and stuff. They were like, get your dreams come true, financial freedom, paradise. And I was like, I was going to call myself like the Lambo trading guru something. I wanted something stupid and corny to make fun of the people that did that. And on the website, DTP, the funniest thing was the first thing that when you landed on the website was a broker statement. That was the funniest part. I had my original website was just a picture of my broker statement right in front of whatever period it was whenever I was making the site. You showed up to the website, there were palm trees on both sides of it and a broker statement with water and the sound of birds flying by. And basically, it was like the name was supposed to make people go, oh my God, this guy is an idiot. This is stupid. And then you get here and there's like, wait, there's a broker statement? That's a real trade. So I wanted to make it like a double middle finger to the whole guru furu nonsense. At the time, I was a moderator. I told everybody I was a moderator for Wall Street Bets at the time and stock market and investing. Three big subreddits I was a moderator before I started anything. And everybody there was like shady and all kind of random pump and dumps, this and that. Not everybody, but like, not everybody there, but a lot of this was there. And it was just all over the place. It was sickening. And I'm like, I'm a real trader, man. I'm like really doing this. I'm really struggling to make my way and do this. And everyone else was like paper trading and penny stock pump and dumping. You just see like a bunch of corny stuff. So I wanted to make fun of that. Years went by. We ultimately made ourselves the app. And we'd have a name for it. Day Trader Paradise had an app. Like we said, just the app, Paradise app or whatever, DTP app. Didn't really have a name. So when we decided to make the platform, we needed a name. And I needed to come up with something. So when the Paradise app that had no name was being converted to a trading platform, what actually happened at that point was kind of cool, was that we had created a situation where we pull options data from our data provider, who gets it from the exchange, right? We ask for data, they send us data. They had like 3 different packages, 1, 2, and 3. 3 is a real-time API built on C++. Blah. Nobody wants that. 2 was a WebSocket, a very expensive WebSocket type connection. And 1 was a REST call connection, right? A REST call API. Which is basically, you know the difference between the two. A WebSocket is a gate that's open where information is just transferring in a stream. It's like water flowing. A REST call is like a carrier pigeon. You put a note on the pigeon, say, go over here. Pigeon comes back with a note. You send, you receive, you send, you receive. You only receive when you send. You ask for something, you get it. And so when we do our calculations at the time, for this one particular calculation, we have to query our database with a REST call. You guys type in SPY. We'd go to the database, does the calculation through the streaming data that goes to the database. We'd REST call to their thing and they get the data back. What happened at the time was like, they were like, well, why don't you get a WebSocket? I'm like, well, because we only need to turn the faucet on for a certain period of time. Turn it on, turn it off. We don't need this expensive thing that costs like 10 times as much. The problem is that we were sending REST calls for every single stock, for every single option that exists, for every single equity in the entire S&P, for every single date that expires. Imagine stock number 500, February 2025, 2026 expiring monthly options that nobody's even trading and nobody even pays attention to. Yet we're like, give us all that data now within seconds of time. So our process of sending this stuff was creating an issue on their end because they weren't caching that information that nobody asked for. So we were sending new requests. They had this API on their own end that knew what people looked for and would pre-cache that information so that this REST call program would work. You essentially, the way you think about it is that there's a security guard at the front of a very long warehouse. Okay, he's here. He's sitting there. At the start of his day, he goes and gets all the data that people usually want, and he moves it to the front of the warehouse. And then he comes here and puts his feet on his desk and goes to sleep. Because that's really what everybody wants. There's a bunch of stuff in the back. You know, like shit that people don't buy. Silicon anal probes. I don't know. The weird shit that sits in the back. Nobody asks for it, so he doesn't go get it. He preloads stuff up here such that when you ask for Apple, oh, right here, he just reaches around, grabs it, gives it to you. Oh, Facebook, okay. NVIDIA, okay. We primarily asked for all of this weird shit in the back. And so the one security guard that was sitting there that would occasionally have to run and grab the one weird thing somebody would occasionally ask for, now had to run and grab tens of hundreds of thousands of things per second that nobody asked for. Because of that, this very popular data provider that is one of the only in the industry that provides this type of data, who powers the majority of options related platforms. You name anybody that's dealing with options, they use this one data provider. Rocket Scooter crashed their servers for everybody when we started out. We pulled so much data so quickly because we sent an army of computers to run all those REST calls. We have an army of server computers to do it. So we can save a little bit of money. and their stuff crashed. And they were like, why are you guys using this program to do it? Why are you not using the WebSocket? I guess because it's like 10 times more expensive. Like, yeah, but nobody does what you're doing. You can just easily open a WebSocket and all that information is coming to you quicker. Why are you pinging the website millions of times a second? Like, what? With these REST? I'm like, because you told me I could. I'm blinking. I'm like, you told me I could. You gave me the specs of one, and you gave me the specs of another. And one of them cost a lot more than the other. And me and my team of engineers do what engineers do best. Can this one work? And sure enough, it could. Their criteria of what they were able to produce, we didn't go over the limit of what they said we can do. However, the problem is that this person runs and gets something and comes back. Now there's 2 orders. Now he runs and gets 2 things and comes back. Now there's 5 orders. He runs and gets 5 things and his hands are full and he comes back. Now there's 40 orders. He can't grab 40 things at once. His hands are full. So he has to make multiple trips just to clear out the 40. When he gets back, there's 5,000, right? So we created this delay effect that crashed this entire program for everyone else. And they asked me, I should just pay more for this thing. And I said, because this worked. And they go, well, yeah, well, it's clearly not. And then we had an argument with this company and we went all the way to the top of this company. We built a case study. And the case study basically said, you guys cannot provide to us what you claimed you could in the contract. And sure enough, after long debates with their tech team, they agreed with us. And they go, holy shit, you guys are right. You found a hole in our system. Now, the problem is that we weren't being fraudulent. We just didn't know that this would happen because we didn't know that we would experience this much delay through these repeated calls. So, because nobody's ever pushed the boundaries to the degree you guys have. As a matter of fact, it's like, you guys push the boundaries millions of times more than anyone else ever did. And it's like, yeah, our system actually couldn't handle that. It was, we stress tested it many times over capacity. But it's like we went infinitely over their stress test, right? Because nobody's supposed to use this way, except for an engineer who figured out that as long as it's within spec, it was possible. And so when I had a talk with my team, the ultimate result was this entire company restructured their architecture to be able to handle our REST call thing. And when I talked with my team, because there were many months when liquidity maps would not come in, and this was like in 2020. It wouldn't come in. Because the delay compounded the delay, and then it would time out. So we get like 10 of them and then it wouldn't work. And some of them would take 20 minutes to come in. We reworked their architecture that they did. We reworked ours as a joint effort. We helped each other. And now you get all your liquidity maps between 30 seconds and 2 minutes because we've all fixed this. And my team was like, Matt, during this process, why didn't you just buy the more expensive data plan? I said, because I'm an engineer. And why didn't I buy the Cadillac? Why didn't I buy the spaceship? Because I had the parts in my garage and they're selling me a scooter and I built an engine to put on the scooter to make my own fucking spaceship for 1/10 of the price. And that's why the logo right here is a scooter with a rocket engine hoisted onto it with a rope. It's not even attached to it. It's a rope tied on to the scooter. Because me and my engineers said, why am I going to buy this expensive thing? I'm going to build it myself. And it will work. And it will fly. And it will go to space. And so our logo is the scooter with rope tying an engine on it that looks like it was like scrapped together from a garage because of that whole incident. And as funny as it said, rocket scooter was something we kept saying to meme this company. You know, we were like, Matt's going to rocket scooter this thing, which means I'm going to make it work the best. I'm an engineer and that's my job, to make it work the cheapest way possible. And so when we were trying to name the company and the platform, we were coming up, we had like sent names to each other, like millions of names. And we came up with the stupidest dumbest. Let me read you some of these names. Because we could have come up with anything, right? And the greatest part is that the data company we worked with was fantastic. Now, it did take them a lot of time to be convinced that they're the ones that made the mistake. And as soon as they figured out, they were like, oh, yeah, you're right. And then we actually proved recently they made another mistake with Meta. Remember I told you guys we got Meta fixed? Because we also did the due diligence for them. That's another story. Let's see. Let's look up the old names. I see. Let's see if I have company names. I think I have them on here somewhere. One. I think I had them on my notepad, but maybe it's on an old. Let me see. Like, yeah, so the names were like so dumb sounding that we kept throwing things together. We were like, hedge metric, hedgenomics, pressurefy, you know, like name generator sounding shit. And it was so corny sounding that every time we'd send each other lists of, we would sit there, me and the partners would sit there and email each other a list of names. And we just vomit our mouths at how dumb they actually sounded. First principle engineering, baby. Gus knows it. Let's go. Hedgenomics. Like, it was the dumbest sounding shit that we could come up with. Hedgeify. No, these are real. I wish I had the list, but I think it's on like an old phone. But I had it. We would make lists and send them around. Let me see if I can find. Trader's Hedge. Like, like stuff like that. I'm telling you, like dumb sounding names. Yeah. So, Brian said, I was explaining like warehouses you took over, even with assistantship. Oh, you're talking about that. What did Brian say? Describing actual warehouses you have taken over where they didn't have the slotting right. Yeah. So like basically back to the old story. They called it cold caching, which means they would preload some of the data, but they wouldn't preload all of the data. They might preload all of the stocks, like with some information of like what's going on now, but nobody's trading S&P 500 stocks monthly option that expires 7 months out, you know, like at all. There's no liquidity on those things. We required them to pre-cache all that information right when the market opens so that we can get it quick. So what they did was they hired essentially more security guards to sit at the front to move most of the data up to the front, i.e. pre-cache it and preload it so we can call it. And now it works like a charm. The data rarely goes down with this data provider. And you guys can thank us, and all these other companies out there can thank us that use this one particular thing. Because we're basically using a system that would like, hey, what's the current price of this option? Oh, here it is. You're welcome. Nobody did that request countless billions of times. Okay. So that's kind of the thing. But the spec sheet said it was possible, and I did the math and said it's very possible. As a matter of fact, as you see now, it's very possible because we still use that rest cost system to this day. And I still pay a tenth of the price. I had to prove to a company and their CEO and their tech team. So me, Amjad, Nadeem, the programmers here, these guys are really smart. Amjad, he's built the platform with me. We put together study after study after study to prove to them they were creating a caching issue. And while on the same token, on our end, our members are getting very hella pissed because the app would just not work, period. And the other company was like, it is our fault, and we apologize. Thank you for proving it to us. And we are very glad to fix it because we never realized this was an issue. And this crashing other people's stuff that are using the system, like the websites would go down and stuff. People can even call a stock ticker value because we would completely cluster up their system. This is a system that's used for like, you go to yahoo.com and you're like, what's the price of an S&P 450 call? And it just says, what's the current price and gives it back. It's not using it to get real-time data or anything. It's just get the data once, right? Like the hedge pressure, we go grab all the information really quick, calculate it, and then we're done. Like throughout the rest of the day, we're pulling in the real-time order flow data, but through a different process. But for the actual mechanism that calculates the liquidity map, we didn't need all that. We didn't need all that power. Anyways. Neil's on the right page. So like the idea, now again, I'm not a database architect by any means. I'm the CEO of this company, which means you guys know me, I figure stuff out as I go. I know very little about the mechanical part of the infrastructure of how this is what MJA and that's what their expertise is. But essentially the way it's described to me is that they hired more security guards and they preloaded more information inside of a bigger warehouse with more space up front to store the stuff that people don't need relatively close to how far the guard has to run to get it. Something like that. So anyways, as a joke, I threw out the name Rocket Scooter and everyone laughed. They're like, that is so dumb sounding. Well, the other names are really, really dumb. Rocket Scooter sounded dumber. Still have ants on the table. But the more we kept saying it, it kept recycling stuff on lists. It became the obvious choice. Because it's what we do in the stock market. Trend lines, Elliott waves, harmonics, RSI, ETM squeeze. Great indicators for what they do, but indicators. Or scooters. Child's choice. You pedal them with your feet. They don't really do anything for you. Every new platform that comes out, brand new trading platform. What is it? Oh, the same indicators. Same childish shit. And what we did was we came and took trading, put a rocket engine on it, to send into space as well. And it was the perfect metaphor for what we've done in Wall Street as well. How many Bitcoins I own? I've never owned a single crypto coin in my life, and I don't think I ever will. For a while. Too early. Bitcoin will have its moment in my lifetime, but I think we're too early for that. So basically, the metaphor is we take what's basic and then we engineer it to make it better. Not by anybody's help, but with parts. Right here. That we find in our garage. Our own brain, our own scraps. We piece it together. And the community here is mostly people that think like that. Like a lot of our members are of that mindset where let's go over the data together. It's all about data and numbers. It's a whole team of people working on this with me. We've increased the integrity of a more rigorous model of the hedge pressure weekly, the blue number calculation, and these are the actual stats of it. The all blue hedge pressure over time, as a lot of our members, who are also kind of engineers, noticed, was that blue hedge pressure almost was like becoming a dice roll as time went by. We've had talks about this with you guys. It used to be 70-80% accurate. Like the blue hedge pressure bounces, and over time, we've noticed a deterioration of the quality, but we figured out why it is. And we started a case study a year ago to figure out and chew on the data. And now me and other volunteer members of this group have been showing the new blue hedge pressure number is back to a 60 to 80% same side close rate, making the integrity of the more rigorous blue model mirror that of the orange one. So the type of rocket scootering that we do is this kind of stuff. We need to make something better. Let's do it. And it actually has proven to be much better. So blue hedge pressures, rigorous correlation is now opening and closing same side under all conditions are roughly 80%, which is great. It adds another high probability trade to our arsenal. There's the 96% of days close below the screen line. 80% of days will close above this blue line. And again, every day we update those numbers with that's the actual back test. So the rigorous model for the blue is a year-long project that just got released yesterday, as a matter of fact. So you guys are trading with the more rigorous hedge pressure model now, the blue. I made a trade off of it today. Very good, very strong, very high probable volume, very strong pivots. And the reason needed for the change is because they created a different options schedule. Tuesdays and Thursday options have now gained more liquidity, and they're more important to the equation as the years have gone by. It's been a couple of years since they've been out. And so our model was less rigorous on Tuesdays and Thursdays when they were less important. And now the S&P is much higher. The error is much more visible. So we've reformulated hedge pressure to include a more rigorous calculation for those options, for those dates. Tuesday and Thursdays. Now we have hedge pressure is back to the 80 percentile. As we speculated a year ago, we would need to do so. And a year later, our speculation has paid off because now our blue number, integrity, has significantly increased from a 50-50 dice roll up, 50-50 same side open and close, where it used to be 80, then they switched the option schedule. Now we're back to close to 80. So you guys understand that the rocket scooter principle is to make, this is the back test, months and months and months of data will be thrown into this. I'm going to log this for a very long time to have this data. And this is what we teach you guys in our classes. When I say 80% this, 88% that, this is where it comes from. And this document is actually shared with members who want access to it. You can watch the testing in real time to know that we're not full of shit. And a lot of people are contributing to these things. So we now have another 80% tool in our arsenal as of yesterday, which is good. Bitcoin's at 2 trillion now. This is not a moment. Oh, no. There'll be a time when it's ridiculously bigger. Yeah, send me a DM if you guys if you want to add to the document. Just message me. I'm gonna check on the puppy in a minute. Neil, on a different note, you got 3 ETF counts funded today. Let's go, baby. Congrats. Had so much fun today. You like the story of the history of the name Rocket Scooter? And it made a lot of sense, right? Because it's just it became a fun thing. But then the logo was like perfect, you know? This logo has a bunch of stars on it. Each one of those stars represents one of the employees or somebody that worked on the project. So each person who contributed early on, our original developers, our current developers, like the original core team of us, each have a star on the logo. You zoom in pretty big, you'll see that the logo has a couple, has some dots on it. You look at it straight up. The stars surrounding the rocket scooter have meaning. Everybody's on there somewhere. So we kind of went NASA with it, with the blue and white kind of thing. And so yeah, the color scheme means engineering. The stars in the background means space. The rocket built on our own means we built it ourselves. It tied onto the scooter with a piece of rope means It works. It's the hoisted way. It's not the. It wasn't machined in a professional shop. We built it in our garage with what we had, and it's flying, and it's flying up with the stock ticker, which means it's going. It's out there. It's working, and it just became perfect. Currently have 20 employees on the team, including myself and the partners. Employees and contractors. The majority of those are developers. You guys all know Slacks. Slacks, tech support, customer support. Slacks is awesome. You might see him, Jod, Nadeem, floating around. Those are our two face-forward developers. We have a development team. We have two development teams, actually, that work under their guidance that you don't hear from. They're not in the Discord. Our partners, our salespeople, our media people, our marketing people. And me. All right, I'm done for the day. Trading day's over. Let's get out of here. I love you guys. I'm gonna say hello to the dog. Check on him. Make sure he's alive. Wasn't he cute? $656 today. Nothing really, meh. Nothing really bad about that. It was easy setup, easy to predict. Yeah, thanks for tuning in, guys. Said we're gonna keep making magic here at this group. Bigger things coming, man. Bigger things coming. All right, we'll see y'all later. See y'all at 3 o'clock for the Zoom call.